So welcome to this practical workshop on how to reach financial independence. Today, we're going to talk about the 5 biggest game-changing practices that have helped me reach financial independence relatively early. So I stopped working more than 3 years ago in August 2018 when I was 33. And it's really a combination of certain things that happened to me, right, which I'm very thankful for, and I've been lucky, but also a few things that I have implemented in my life. And some of these things, I'm hoping you will get inspired, and I'm hoping you will realize that there are things you can do for your own financial independence that will help you progress on this journey. Right. So this guy is someone who is part of the expert commission on pension reform for Belgium, right? And he's working on this with a large team of experts, economists mostly. And he says something about the pension system in Belgium, that there is a structural emergency. And so he says that we are in the midst of a pension crisis. It's happening right now before our very eyes. And this is something that we see in the newspaper once in a while on a regular basis. The governments, they sort of keep pushing this back to the next politicians because they can't find an actual solution. And this is a bit worrying. And so this is basically one example of why financial independence is so important. We don't really know how much we can rely on the government pension system, and clearly at the moment is in trouble. And so unless they find a solution, it's really important for us to plan for at least have enough during our pension. And if you can, build financial independence so that you can even stop working earlier if you want to. So this is a very strong argument, one that applies to everyone in Belgium, really. Now you can find, this is a link to the article, and there's a French and a Dutch version of this exact same article there. So I invite you to go and have a look at that if you want to know more. But basically, that's what financial independence helps us. We answer this question with financial independence, the whole movement and the whole philosophy behind this, which is basically the ability, financial independence gives us the ability to make decisions without the pressure or stress of the consideration of financial impact, or at least a reduction of those concerns. So we can make financial decisions a bit more freely, and we are not directly dependent on others, all the way to the point where we have enough income to pay for our living expenses without having to be employed or depending on the system or other people to pay for our expenses. And this is the simplest definition of financial independence. It really is a very empowering way of looking at life. It's all about taking responsibility for your own situation. Wherever you are, there is something you can do to improve your situation. And it's taking back control. And when you take back control, you can make a big change in your personal life. Now, financial independence is not all about getting to the point where you can stop working. Financial independence is about making those small changes gradually in your life so that you gain more power, more control gradually. Every euro that you save, every euro that you put to work by investing it in a simple and effective way is more power to you. It's more options for you, more freedom for you to make decisions in your life. And every time that you progress, money is less and less a major concern, and you can make decisions more freely, things that are more aligned with your values, which we're going to talk about soon. So for those who don't know me, my name is Sebastien Aguilar. I am an ex-consultant in sustainable development and renewable energy. I have worked for a total of 8 or 9 years as a consultant in Belgium and also abroad. And a few years ago, I found myself in a position where I could actually stop working because I had achieved financial independence. And since then, my life has been focused almost entirely on my family. So my wife and I, we had our first son a few months after we stopped working, and our second son was born just recently. But basically, that's most of my life. And I am extremely thankful, of being able to work like that or live like that. And I just want to share this. And so already 6 or 7 years ago, I started sharing those ideas around me in my living room, but then later with bigger audiences. And this has become bigger and bigger. So I used to work in the Middle East. And so these are events that I was holding in the Middle East, teaching exactly some of the things that I'm going to talk about today. And then now I'm back in Belgium since a couple of years. And I'm doing this through Fire Belgium. So that's why we are all here today. But financial independence is not complicated. So there's a few of you who were saying this is the first time you hear about the concept. And so I think the easiest way to show you how it works technically is through the financial independence formula. And so it's really simple. If your passive income is bigger than your living expenses, you are financially independent. So it's extremely simple from that perspective. Now the whole philosophy is how to actually get to that, right? All the strategies that we're going to talk about and all of the different practices is basically for us to get there in a good way. Now, how do we get there faster? So obviously we have to start generating passive income, and not everybody has that. Generate more passive income. So whether you start from zero or you already have some, so that you can, and to get there, and to do that, you need to earn more money so that you can invest it. And also you need to find a way to invest it wisely so it works for you in a fairly passive way, right? So that would be passive income. And on the earning side, there's, a few ways of doing that. The most common ones are either to simply work and earn money through your job, or to do more entrepreneurial type activities and earn money through entrepreneurship, your business or side hustle. And then from an investment perspective, there's many ways of investing, but what we see mostly used in the community is passive low cost index investing, which is also the way I invest. And also there are good ways of investing via real estate, which I call smart real estate investing, because not any house or any apartment is a good real estate investment. It requires work, and it requires to be done properly to be a good comparative investment, a good investment comparing to, for example, stock markets, so index investing. The other part of the equation is to reduce living expenses. So you generate more passive income, and maybe you get to, there's a limit to what you can get there, and you reduce living expenses so that they match to your income. And that is a way of getting to financial independence. So saving money is a big part of this. Living fairly low cost is a big part of this. And to achieve a reduction of living expenses, a lot of what is shared is, tips and strategies to save more money. To me, these are all tips and strategies, but the two main aspects, the two main ways we get to reduce living expenses by considering structural changes, which are big changes in your life that have a big impact on a lot of aspects of your life, and then mindset changes. And the structural changes include moving abroad, changing where you live, changing the house you live in, changing the type of transportation. So big structural things. And the mindset changes are more, how do you just perceive things around you in terms of the value that they add to life, and whether that is worth money, the money that it costs you or not, etc. Right? And so they both have benefits and good ways to think about this. But basically, this is a high-level financial independence formula. And if you want to know more, you can get it on the Fire Belgium website. There's a blog post on that. These are the way I got there. No inheritance, no smart, stock picking, Bitcoin, crypto strategy. I didn't launch a specific like a genius business or anything. No, I was good at work. I earned good money. I was delivering value. I got paid for it, and I invested. I saved well, and I invested in low-cost index funds. That is all my strategy. It's extremely simple, and really anyone can replicate, because there's no magic behind what I did. There's no luck. It's simple and it's replicable. So, 5 game-changing practices. So this is what you will see on your worksheet. The first part is mindset. Second part is safety. Third part is control and optimize. Fourth part is investing. And then fifth is further together. This is about, you're working with your partner and getting the right support group or community. So these are the 5 pieces that we're going to explore today. We're going to go through them one by one, and I will ask you a few questions. And then for each question, I'll give you 30 seconds to type something on your worksheet. And then we will reflect on, your answers. You will reflect on your answers. We will take time to reflect on your answers gradually throughout. But first, we'll go through each of those questions fairly quickly so that you can type them. Maybe you've already started typing on your worksheet, and I think that's, please go ahead. But if you are busy, come back to this and listen. So what are your core values? Financial independence is all about living according to your values and doing what you want, really, what really matters to you, and pursuing fulfillment, right? So what are your core values? This is a very important question. It's some question that's quite difficult to answer at first if you haven't taken the time to think about it. But I would love to maybe see in the chat if you have, if you know your core values, just type yes in the chat. I think, this is a simple, it's great to see if some of you have that already figured out for yourselves. So feel free to type yes in the chat if you have your core values, or you can even put some examples of your core values there. But for everyone else, do you have core values? And if you have core values, you can put them in there. If you don't, then, maybe simply say, well, I need to work on this. Maybe that's something to look at. But core values are really the foundation of everything we do here. That's why this is the first thing we talk about. So I highly recommend you spend some time on this. There are, interesting resources here. It's a YouTube video that I also, I think, provided in the worksheet. And those having core values basically creates clarity in your life, alignment between the different things you do. You can share your values with others, and they will understand you better, and also helps you prioritize what to do with your time, your energy, your money, etc. Right? So my priorities, my core values, I have two levels. I have my foundational core values are family, freedom, and impact. So these are the three main things that drive me forward. And my whole life is really built around that. My career was built around that. The way I design my life today is like that. And then I have other values that come behind that: integrity, honesty, which are sort of the same, simplicity, sustainability. So these are other aspects, and community. So there's like 3-4 extra ones, but they sort of come on a second level. And I really invite you to do this exercise for yourself and figure out what's really important. Don't use mine, just find what's important to you, because it's your life. So spend some time on this. You don't have to do it right now, but it's important. Now, this is something you might want to do now, if you haven't done it already. Why are you in this workshop? Why do you want financial independence? Why are you interested in financial independence if it's the first time? And what are you aiming for? Like, I think it's worth knowing what it is that we're trying to do here, what we're trying to achieve. And I would invite you to type in your worksheet. You can also share it in the chat. I think it gives you ideas. You can give ideas to other people. But why do you want financial independence? And I would say there's really two main ways to looking at it. Are you running away from something that you don't like about your current situation, or are you going towards something that you would want to have more of? And I think this is an important way of looking at financial independence. Ideally, you have something that you're striving for rather than something you're trying to run away from, because financial independence might not be the answer you're looking for. Maybe you'll be working on this for 10, 20 years, and then you get there and you don't have what you're looking for. So figure out what you want and try to go for that. And maybe you don't need to wait until you reach financial independence to actually get some of it. Often this is linked to your values. Obviously, for me, family, freedom, impact. Freedom was very much tied to financial independence. Family as well, because being able to be there for my kids almost 24/7 is really, really core to my way of living. But I was striving for that, and I think it helped me in the sense that I wasn't focused on the negative in my life. I was focused on what I was going for, and I brought this forward into my life before reaching financial independence. So freedom for me is not only financial freedom, but also movement freedom, also travel freedom, also a lot of different aspects of freedom are part of this. And I was implementing those already in my life. And I think you don't have to wait for financial independence to really integrate that in the way you live. And financial independence can be scary if it's something that is like 20, 30 years in the future. Whereas if you bring those things to your life today, if you can make the space, create the time, and so that you can actually live your values and focus on what you really want, then the journey becomes amazing, because every time then you're already living what you are striving for, and just financial independence helps you get more of it gradually, more power. So really, really important. And then finally, it's really important that your purpose, your why, is really, really strong. It needs to be stronger than comfort. It needs to be stronger than the status quo. It needs to be so strong that you can be bold at work, but also in your social life with your family. Be bold enough to make big decisions, make changes. Be bold enough to be different and be comfortable being different from people around you, because it does require some extraordinary things. If you want to achieve something extraordinary, you actually have to do something extraordinary. If you want to do something different than most people, you kind of have to be different. Like if you want to achieve something different, say not wait until 65 or 67 to retire, then you have to do certain things differently too. So you have to be like, your motivation is to be strong enough that you're willing to go in a different direction, or to do something different than your peers, and maybe different than what your parents are telling you, and your friends and peers and siblings, and hopefully as you go down that path, they will understand why you're doing it, and maybe you will inspire them. But you really need to be bold. It's super important, and for that, the strong purpose helps a lot. Like these are two super important sections, and we spent quite a bit of time on this. Yeah, I can't emphasize enough. It's really important. Now let's look at obstacles. So this is more the opposite side of things. What obstacles do you see that prevent you from reaching financial independence, or from pursuing financial independence? You can list them here, whether it's just one or several. Like list them all. Like really go out, say these are all the problems I have. This is all the things I need to solve. It helps to put it down somewhere, because just identifying them, then you know what you need to work on somehow in the future. And then if you can prioritize them and say, this is the biggest problem, that's even better, right? And think about, like, obviously this takes a bit of time, so maybe you don't have time to do the full thing now, but think about what you can do to overcome those obstacles, and think about those obstacles in a way where they're not external issues, but look at the things that you can do to change some of this, right? Like focus on your locus of control. So look at the things that you can actually influence, and make those the ones that you focus on, because you can't change the entire world, but you can change a lot of things in your own life and a bit in your surroundings. So it's important to do that distinction and focus on what you can control. And then what can you do? What can you do? What do you need to do to overcome them? And the best is if you can break it down. Now, this can take a while to do this. Now is probably the best time. Probably not the best time, but it's, type down already a few things. And what I invite you to do is come back to this worksheet, maybe after this workshop or on another day, and work each section one by one. But this can help you a lot, I believe. Yeah, it will help you identify what to do next. And basically, the whole point of this worksheet is to identify what is the next smallest step you can take. And maybe you already have an idea here, right? Maybe you say, my biggest problem, well, maybe you don't have your values sorted, and say, well, I have to define my values. So my next step would be figure out how to define my values. Or maybe you say, my biggest obstacle is my spending. All right, and so I have to figure out what to do about my spending. We just write it here, and ideally break it down into the smallest next step. Now it takes time to figure out what the very best path it is, but this is what you should be aiming for. And we'll come back to this when we get to the end of the session, where we're going to go through your goals and the next actions, the next steps. But basically, in each section, I'm going to be asking, what's the smallest step you can take to make an improvement? Right. So let's go to the second section, which is safety first. So to me, financial independence is mostly about financial security. It's about having a safety net, a buffer, a way of dealing with emergencies that gives you more power, more flexibility, more freedom. You're not at the mercy of things changing around you, your employer deciding that something needs to be different and it doesn't work with your own personal life. So safety is the key, because it unlocks so much. Right? Once you have safety, then you can be probably bolder and take higher risk, or maybe go for, more difficult things, but that can bring you more rewards as well. So how much security and safety do you need? The question here is, some people need more security than others. So some people have more responsibilities. They're in charge of, say, a larger family, or there's some disabilities involved, or some other people are single and they're renting, and so in terms of responsibilities and how much you need to be safe, it's much smaller. So here, identify how much safety security you need, who and what do you want to protect. And this question comes, this is something I've learned from experience, but basically now that I have kids, I'm looking at things differently. It's not just me, my own little freedom and security, which it was, that's how it was a few years ago. Now it's more, right? I need to be a little more cautious, and I need to think about other things before I make decisions. So basically my need for security has gone up significantly. And so identify what it is that you need in terms of safety, security. It will help. And then think about where you are today. What level of security and safety have you achieved? And in this case, I have identified the 7 levels. But so having reliable income, that's probably the first thing everybody's striving for. It's normal. Being able to save some money, having some money aside saved, paying off expensive debt. So if it's high interest debt, then you want to pay that off. Having an emergency fund, so 2 to 4 months of living expenses, in case something really bad happens to the economy. Now, also depends on what level of social security you get. Normally in Belgium, we are fairly safe, and we get some kind of support if we get fired. But sometimes things don't go that way, and you quit your job for other reasons. You couldn't get fired, and you can't access this social security. So having your own living expenses there gives you power. Then there's the 5th level is what a lot of people call FU money. To me, it's mostly financial runway. How long can you last without having to earn an income? And does that make you feel more comfortable so that you can actually make bold decisions, right? So this is often counted in number of months or years. But yeah, like if you dream of going around the world and travel for a full year, think about how much time it would take you to come back into work and then find another job. Maybe you want to have 2 or 3 years of expenses saved aside so that you can do this 1-year trip. But basically that's the idea. And then similarly, if your dream is to, become an entrepreneur, you might want to have good savings before you cut, you turn off the tap in terms of income and go on your business. Best is if you do both at the same time until it actually works, but not everyone can do that. And then, is your money working efficiently for you? Are you investing in a way that is aligned with your risk tolerance? So investing strategy adapted to my capacity to take risk. I think this is important. If you've just put 1,000 euros into crypto and you don't really have a plan around it, that's not exactly the same thing. But if you have a solid plan around your investment, then you're in a much safer place, especially if it's a plan that is resilient to market crashes, for example, in index investing. So these are some of the important aspects into the safety. So if you're not where you want to be, what is your next step? Like, do you have enough safety? If yes, then you move on. If no, what do you need to do next? Right? Write it here. This is pretty straightforward, I believe, in most cases. Now, control and optimize. This is a bigger section. There's several subsections here, and we're going to start with just having an idea of what is our net worth, right? So typically, this is the way we see, money. We have cash in our bank accounts or in our wallets. We have income coming in and we have expenses. And then we have asset and liabilities, which, we buy assets or we buy liabilities, and then sometimes we sell them, we get some money back. And so this is often considered our net worth. And this is important for you to control and improve, and obviously have a good idea of what it is. And this is obviously very relevant to this section. Also, you can think about what are investment returns you get, but also investment losses and costs. So basically what comes in and what goes out, and what basically changes your net worth. And a minimum level that you need to have a very clear understanding of is this first level up here. This is where you do budgeting. At least you track your expenses. You need to know how much money is going where, so that you have a clear idea of where your money is going. Like, this is all about the numbers, the clarity of your personal situation. And then once you start investing, it's important to include your assets and liabilities, and also have some kind of tracking here, a good view of what's going on. And this is really important. So the simple first question is, do you actually know your net worth? What is it? Is it clear in your mind how much you have and where? It's important that you do know. And then, are you tracking your finances? And yes, no, and in different ways. I think in the worksheet I have provided there a few different options of how to track your finances. I think something that would be interesting maybe for everyone here is if you want to put in the chat the combination of, I think I can probably, yeah, I will do that. So in the worksheet, I did that on purpose. How are you tracking your finances, right? You could put a combination of 1 and B, for example, or, I do occasional review of my expenses and I do this manually, right? So 2A, or occasional net worth estimation, but I do that with the help of an app of software. So feel free to put those numbers in there or give an idea of, everyone around here, what people are doing. If they're doing it on a regular basis, they have the system in place. If they just check expenses, or if they have the full net worth calculation, whether they do it manually or with the help of an app of software, or if someone else does it for them, right? So this is quite interesting. And yes, I think there's a question of what app software you're using. Feel free to share in the chat. It might give ideas to a lot of other people. Thanks for sharing. The next question is, are you forecasting your finances? And this is typically something that is possible to do once you have good tracking. It's essentially just looking at what could happen in the future if things go the same way, and try like doing this forecast is something that really helps seeing what the future could look like and planning for different scenarios. And this is obviously a bit more of a spreadsheet type work that you might want to do or not, but it can help. And here's an example of how I used to track my expenses, right? So for me, it was spreadsheets, and I would do a lot of stuff manually. Later, I started with extra apps, but basically this is how I started. I think I started actually in August here, 2011, when I realized that I was in debt and I had to pay back my brother. And I wanted to know how I was gonna, how long I was gonna be in debt and how much money we're gonna have, and I wanted to build an emergency fund. And then I went backwards to figure out what happened to my money that I just earned and how much I had left and all of that, right? So you can do that by checking your bank statement, historical bank statement, and checking, how much money you had a year ago, how much you have today, or how much you had every month, and how that changes over time. And if you have a breakdown of expenses, you can even have those expenses by category and have an idea. This is how I started. It's super simple. Later, this spreadsheet became a monster with lots of stuff, but this is really the simplest way to start. You don't even need all of the breakdown of expenses, but just simply how much do I have every month in my bank account, how much am I being paid, and that gives you an idea of how much you're saving or not saving. So you do this on a monthly basis, monthly snapshot. Put your income on one side, expense on the other side, your savings, which is a difference, and cumulative savings as you progress. What's really important is that you build a stable income. And this is something that for me happened in August 2011. I actually got a full-time job before it was internships. And to me, getting out of debt was the next super important step. And then right after that, build my emergency fund, right? So this spreadsheet might look scary for those who have never done this, but really you just write one line, you take note of a few numbers, and then the following month you take note of the next number. So it builds gradually, very easily, and you don't have to put all of the colors. All this is a bit fancy, but it can help. So forecasting is basically, if you come back to this at some point, in December 2012, I would say, okay, I know that I'm probably going to be earning the same thing next year, and I'm going to be spending something similar, so I can see how my net worth is going up, right? This is all in dirham, by the way. It's not in euros, so don't think that I had 100,000 euros after 2 years. No, it was divided by 5, so it was about 20. So I was saving good money there, obviously. Yes, and so basically you can forecast that in the future and give you an idea of where you're going. Do you know how much and how long you need to reach financial independence? This is something that I've spoken about in the group, but for some of you who are new, I have a tool and a demo on YouTube for which you have the link in the worksheet. Basically shows how you can do this calculation, right? And I talk a lot about this on the YouTube channel. And then you have access to the tool. You can do the numbers for yourself and figure out how long it would take in your current situation to get to financial independence. And then from there, you can also identify what you can do to improve your situation and maybe reach financial independence a bit earlier. Note that this tool does not take into account government pension. You can add that if you want. Anyway, so you have the link, so feel free to do that as well. And so the next question is, okay, where do you want to be? So, and if you're not where you want to be, what's the next step for you in this specific area, right? Tracking and forecasting. Now, in terms of earning more, as we've seen on the financial independence formula, is an extremely important aspect, and it is one of the pieces that for me was was crucial to my success. Now, I studied engineering, so I knew that it was going to give me value. I was doing it mostly for the impact that it would allow me to have, but the money was following. It was nice, obviously. And then I actually expatriated myself, which completely removed the ceiling. I removed some of the ceilings that are here in Belgium. I expatriated myself to a place where if you have value, you get compensated for it. And I just delivered value. And so I climbed the ladder in a way, in that way. But there are other ways to earn more. You don't have to give up your life in Belgium. But as I said, if you have a strong enough why, which I didn't, for me it was for other reasons, but you have a strong enough why, you can consider moving to a place where you can earn more, and it can be super powerful. It can really, cut your journey to financial independence by 2 or 3, if you're if you have the right profile and you're going to the right place with the right mindset. But what options can you explore, right? So this is the way it happened to me. But what can you do? Here are some ideas, right? Change location, which is, for example, expatriation, but also move to a place where life is cheaper but maintain your work remotely, right? So people move to Southeast Asia or South America and they work for European clients and American clients and make good money and live very cheaply. And that is a massive difference. Now, obviously, it's the same as expatriation, but you can also work for a European employer being abroad, especially after what happened in the past couple of years, is sometimes become more possible. Change job simply, sometimes it's just you just need to move employers because some are paying better. Increase your market value. So that could be changing even your career type, but gaining new skills, improving your personal branding within the organization so that you are more recognized for your achievement. Network. So there are different ways of increasing market value. Mostly it's by delivering results, right? So if you can do that and make it known to the hierarchy, then you can go and ask for promotion and pay raises. There's various ways of doing that within your employment for employees. But then if you want to go outside of employment and you want to explore to create or increase your side income, then that's worth doing too. It's worth thinking about. And here are some simple ideas that a lot of people can do, right? So teaching, if you probably become gradually good at something in your work, and there's a lot of people who want to learn that. It's not always easy to find them, but there are ways to find them. You can teach online, you can teach one-to-one, you can teach for free on YouTube if you want, and that could lead to business. And so teach, create and sell. You might be good at doing things with your hands or with code or with anything. Buy and sell. So you don't really have to create, but maybe you're good at finding good deals because something is being sold at that price there, and you can actually buy it at this price here, and use this sort of approach. You can sell your skills if you have other skills, but mostly it's when you find problems and you can solve them, that's where you make a big difference. And that is the core of all of this, obviously. And you can do this within your job, but also outside as a side activity. So anyway, this is mostly for you to brainstorm, think about it. Most of these sections could expand into hours of conversation, but the idea here is for you to go through all of this in one big way and then realize, okay, this is where I want to focus on. Like, it's the key idea here is for you to identify the gaps that you may have in your plan or in your perspective or in your understanding of financial independence, and realize that there are so many ways you can move forward on this, right? Sorry, there's someone who unmuted. Can you please mute yourself? Thank you. Okay. How can I check that? give me a second. One, I'll be back. Here we go. Okay, good. Right. So control and optimize when it comes to earning more. If you're not where you want to be, what's next? What's your next step? Again, you can write it there. Now, saving, right? On the other side of the financial independence formula, we have saving here. So the question is, do you feel like you're saving enough? What opportunities do you have to save more? And then again, we talked about structural changes, but also mindset changes. Are there things here that you might consider that you want to actually explore? And I think this is where you can write it down. And so again, here, identify what is your next step. Maybe it is, take a look at your expenses and figure out what to cut. Some people have reoccurring expenses through subscriptions that they don't use. Some people can easily save 200-300 euros by just changing electricity or water or phone provider. And so these are small things that a lot of people can do, but it's certainly, quick wins there's a lot of quick wins on the saving side of things. So it's certainly worth exploring if you're just starting. And then investing. Where are you now? So we're going to spend a bit of time on this because it's a big topic in the financial independence community. And we will even take questions on the next slide. But so in terms of investing, where are you now? Identify, which of these is you're currently doing, and it could be several. And then we're going to talk about mostly how to invest privately. So the problem with investing is that the way we learn about investing is through either our parents or banks. A little bit at school, but very little. Mostly it's about make sure you save money. That's kind of the only message we get. And sometimes, and then we learn, okay, what are our parents doing? We do something similar. Rarely we learn like from more official sources of how to invest in the right way. Some people have good friends groups where this is a more open discussion, but then it often ends up being, hey, look at me, I've done this, and this is a hot stock, or here's a hot tip, and look at my crypto portfolio, how it's doing. And so it works sometimes in those situations more like a FOMO type mechanism rather than a well-planned, long-term investment approach, which I think is what you need to reach financial independence. Not something that's short-term and maybe very volatile, but rather something solid. And so here, buying a home and apartment, in some cases, it's a good investment. In some others, it's a bad investment. In most cases, people don't do all the work that's really required to make it a great investment. It can turn out to be a good investment, but not always. There's a lot of things going on there. It's pretty opaque, but certainly it can work. And it's better than doing nothing. It's better than not saving. Sometimes the mortgage acts as a forced savings plan. And if you're lucky, you're in a good neighborhood and the value goes up, and you don't have issues, and you can even rent it later, it can be good. But if you want to do really well, it's important to spend good time thinking about it, strategizing, researching, networking, finding the right deals, low cost, making sure it cash flow positives. And hopefully you have good equity in it. But there's ways of doing this, and optimizing this massively. So if that's the way you want to go, investing in real estate beyond your house, maybe just your house, it's important to spend time on this and do it properly. Now, investing via the supplementary or extra legal pension, the second pillar, and then the individual pension savings plan, they're not always the most effective because there's a bunch of fees in there. Despite the tax advantages, it doesn't always compare well to something like index investing or real estate investing when it's done well. And so the fourth pillar of the Belgian system is privately investing. And this is where obviously real estate, but savings account, index investing, your trading account, if you want, this is where they fall. And I think this is where we can make a massive difference because there's no ceiling. And it can be very, very efficient, despite not being very pushed by institutions. Obviously, banks and a lot of financial institutions, they make money from all the other ones, but from this one, not so much. So I highly encourage that you look at investing privately through the fourth pillar. And this is what we're going to talk about in the next slide. And thanks everyone for sharing, what you're doing. It gives an idea to others. That's very good. So what type of investor are you? This is a slide that I had prepared for a different presentation, but it's exactly what I need in this one. It's a high level view from my perspective of four main ways of investing that a lot of people think about or consider. and basically a comparison table based on specific criteria that are fairly important to me. Now, if you can take a screenshot, take a screenshot, because I actually didn't put this in the worksheet. I probably should have, but it's too late because you made your copy already. But take a screenshot, and if I will also send it anyway. You will see the replay, and if I think about it, I'll send a snapshot as well in the follow-up emails. But basically, this is my perspective, right? And what I'm saying is that real estate, it's what most people understand. It has low to medium returns in most cases. It can have good returns depending on the work you put in. Low volatility, high entry cost in most cases, and transaction costs. It takes some time to learn to do well. It's not just buying a house off of ImoWeb and hoping it will be okay, or an apartment. It's really, there's a lot of work to be done to find the right deals. I think it does require a lot of work up front, and then some work to maintain. If everything goes well, it can be just a few minutes per month. If things don't go well, it could be hours and hours and hours and tens of hours, full days dealing with problems. It's difficult to access the capital once it's invested. That's not really an issue when investing long term, but it can for some people. You actually need some capital to start. It's very low in terms of diversification. It's fairly hard in terms of implementation because of all of the stuff that has to take place before you can do it. And if you want to do it well, there's quite a bit of work. So to me, this is the most common way of investing for most people. At least the one that we talk about the most. But is by far it's not the easiest. It is what is pushed to us by society as the American dream in a way, home ownership being the thing that every Belgian wants to have. In French we say we have on a brique dans le ventre, but it's basically part of our culture more than anything else. It doesn't mean that is the best way to go and pursue your goals. It has a few important benefits and a few drawbacks, which I've talked about already. Then there's DIY stock trading. This is active investing, when you do the research, try to find the good stocks to buy and invest in. Or even for crypto, I think it's also a way of doing that. There's a lot of potential work involved. Most people are scared because it can be very volatile. The returns can vary a lot. It can be very bad, it can be very good. A lot of it is based on luck, because can't really predict the future. It can be very volatile, as I said. It can have high cost if you trade frequently. It can also be low cost if it's done in the right way. It takes a long time to learn, in my opinion, if you want to do it well. And it takes time to maintain, because obviously it's more on an active side, and you want to prevent things when they go bad, and you want to be there when things are looking good, etc. Easy access to capital, medium starting capital required, or medium to low. It can have some diversification is done well, and it can be fairly hard to implement well. And again, some benefits, some drawbacks are there. Then is investing via bank, which I'm not going to go into the details, but basically it's super easy, because all you have to do is go to your bank if you have 10,000 euros, and they'll say, oh, put it in this fund. And then you think about this. They'll ask you to fill a form that doesn't really change anything, because they have to, but it's not serious enough. And then you have your money in the fund. And the bank will be making lots of money from that, and the intermediaries as well. There might be a tax advantage, but often the tax advantage does not recover for all the fees that you're paying in. And then you have the alternative, which is DIY index investing, which is very passive, which most people don't know, but that's what we talk about in this group, which tends to give good returns. It's done much better than any kind of investing via banks or active stock trading. It's low cost. It takes just a few weeks, a couple of months maybe to learn. If you get the right support, it takes a few minutes per month to maintain. High access to capital, obviously it's not really necessary. You don't need very much money. You can start with 100 euros. It's high diversification almost instantly, right? There's quite a few people chatting here, sharing platforms where you can do that, but selecting a low cost, globally diversified ETF will give you access to almost entire stock market in just a few clicks. It's really easy to implement, and super effective. It's also, it has tax advantages. Belgium is one of the very best places in Europe to invest from, because we have no capital gain tax, and super powerful. Whereas almost other countries, you have to pay taxes on your profits. In Belgium, very, very little, almost none. So obviously the industry doesn't want to show you this. They don't want you to know about this because they make zero money from this. Even the brokers, which we all use, they have no interest in us going to them, opening an account, because we cost them more money than they make from us because of how few, because we don't make many transactions. I'm sure a lot of them are just losing money from us, but they offer the services mostly for trading investors, and we benefit from that, from the low costs. But basically nobody makes money from this, so nobody talks about it. That's why the community exists. That's why we're here, to make a difference. And that is also my way of investing, and the one I support a lot. So investing, what type of investor are you? I think the previous table here can give you an idea of, what you want to pursue, what you want to learn about. If you are very much of a hands-on person, then maybe real estate is the way, because you don't know, but maybe it's just a matter of learning a bit more about the stock market and figuring out how that works. I think it's worthwhile exploring and then deciding after you've explored both sides of things. So what type of investor are you? Now, if you're interested in index investing, I am actually running another, so similar to this. This is a workshop. The other one is more of a presentation, but it's a free online seminar next month, 16th of November. Today is what, 19th, so it's almost in a month. Here you have the registration links, exactly the same as for this event. You can use those links to book your seat now. You have them in the worksheet, I believe. So yeah, I've selected 2 dates because a lot of people were saying, hey, I can't come on Tuesday because I'm busy. So I thought, okay, we'll do it twice. So it's on Tuesday and Thursday of the same week here. So that's, I'll present the whole approach of index investing, how to get started, all the steps, my own framework, and also the program that I've developed to help people get started, much faster and easily. So that's happening next month. And then you can also download the beginner's guide to index investing I have on the website here. So feel free to go grab that. All right. So investing, if you're not where you want to be, what is your next step? Again, here, identify what are the things you want to explore, what are the things you want to do, and just list them down here. So that gives you another to-do list on a very important aspect of financial independence, because investing is what helps you create passive income. It's one of the many ways, but this is most important, like the most passive way. So certainly, explore here. It's important. Now, this is the last section, further together. What we're going to do is I'm going to go through this, and then we will do a lot more of an interactive session where we're going to talk about a few of those based on your vote. So after this section, we're going to do also the action section, and then we're going to do an exit poll in which I'm going to ask you which of these 5 are most important to you, and we will do 1 or 2 rooms where we're going to discuss those in more details. And maybe we'll keep it all in one room, but we'll try to pick a couple of topics so that we can dig deeper and see how we can make progress all together. So further together, to me, this is, it's very difficult when you're doing something different from the rest of society to actually move forward on your own. So what is your support group? Who is there on your journey with you? And I think this is a very, very important question, especially for single people, but also for married people. And how do you talk about money with other people, whether it's your friends, your family, or that specific group? Identify, what is your support group, but also how you speak about money with other people. I think here what would be great is if in the chat, if people have experience opening up a conversation about money with someone with whom it might have been difficult at first. Would be interesting to hear any experience here. Money tend to be a taboo in certain families. It's almost forbidden to talk about it, which kind of creates a stigma. A lot of people have trauma related to money, in one way or the other. So pursuing money nonstop because that's the focus of their parents, or lacking money a lot and or seeing money as, a very, very evil thing. And so that can create, strong traumas that we have to sort of work through sometimes. How do you talk about money with other people. Love to hear some of your comments. I can share a little bit of like my experience. I mean, me and my wife, when we met, we were both fairly good savers. We're both fairly good savers. And we were about to get on a trip together, traveling around the Middle East on some crazy places, backpacking, amazing trips, some of the best. And we were talking about what next, what comes next after this experience in Dubai. And money came as a point of discussion because we were saving this money, and that's where I shared a little bit of my plans, right? And it just happened that sharing my plans triggered a lot of questions. So my wife was fairly open-minded from that perspective, and she was curious, right? But not everybody gets curious when we talk about this. And she had not started investing. I think that was a major factor. She was looking to invest in real estate, but was finding it very difficult from abroad. And I shared my way of thinking about this stuff and my investment strategy and my plan to reach financial independence is quit working and travel more. And because she's a big travel lover, we basically had a lot of core values in common. To her, freedom was super important. Family was super important as well, and travel and exploration and discovery, and also having something to work towards. Now, what she shared with me is that she was in a place where, after graduating from university and getting her job, she was working on certifications, not so much because she needed them, but because it gave her a purpose, something to strive for and to go for and to look forward to. Whereas otherwise work feels a bit like, okay, so now I've graduated, I've got my degrees, and now I start working, and then next, what is next? 40 years of this? It's not exciting. What am I going to do next? So that completely changed her perspective when all of this happened. And what I heard from good friends is that one of the best ways to get to talk about financial independence is to speak about values. What do you value? What is it that you cannot live without? Like simple, small things that are important to you, right? And that could be anything. That could be, a walk in the park in autumn. It could be my dog. It could be, some hobby that we have. And then it's about finding ways to basically build that into the plan and say, hey, how about we find a way so that you can do more of that and I can do more of that, and we get there faster together. And financial independence often allows people to do that. Very few people say, I just want to work forever, 24/7, weekends included. They would say, I love my job, but I wouldn't mind having longer holidays, or I wouldn't mind being able to go part-time when I need to, or I wouldn't mind being able to spend time with my family, my parents getting older, or my kids. And that, again, all of that can trigger a conversation around financial independence and unlock that sometimes difficult conversation. That's my own perspective. So I hope it helps. If it helps, kind of in the chat. I'll check it out later. So obviously another way of talking about this is simply to join a group like this one, Financial Independence Belgium, the FIRE Belgium group on Facebook, 3,500 members. We have a lot of conversations online. We have regular meetups. Today you will experience, true exchange of value in what's coming next here. And then hopefully you like it so much you come back again. But feel free to join the group. It's awesome. And Further Together is also for couples. If you're in a couple, is your partner on board with this idea? If you're already pursuing financial independence, if you're convinced, is your partner on board? How do you bring your partner on board? That is a very important question. I think what I was sharing earlier is, my approach to it, but maybe there's other ways. But this is, these are tough conversations that can completely change your life. And because financial independence can be seen as something so extreme, you kind of have to be careful about how to do this, because it can backlash. If it's presented as, hey, you can't spend on anything that you love, then it's game over. No, financial independence is not about that. Financial independence is about spending on the stuff you love. And if you love freedom, buy your freedom. And then for those of you who are looking for a partner, I think, again, here, core values are important. Like, what are you looking in terms of core values for your partner? Because they will, that will help you identify the right person, above and beyond some other things that happen. I don't know. I can only speak from my experience, but I was with wrong partners before, and clearly we didn't have the same core values, and it just didn't last despite all the fighting, despite trying. It just didn't work. Just too different in terms of core values. So very, very important to me, and something to talk about, early in the relationship if you can. Anyway, I hope this helps. Again, if you're not where you want to be, what's your next step in terms of support group, partner, speaking about money? Yeah. I mean, this is super important, because alone is tough, and alone often we simply stop trying because it's difficult to go against the tide nonstop, against the current. So now action, the last section of the worksheet, and after this, I promise we're going to do a bit more talking, but the last section of this worksheet is for you to make a summary of your goals. And so I created a little table here with 5 goals. You can have as many as you want. Typically 3 to 5 goals is enough. Ideally, you want to be able to list them and then spend some time digging a bit into them and identify the number 1 goal, the one that is the most important, the one that will make everything else either easier or unnecessary. For those of you who know the book, The One Thing, this is how they present it. But basically, identify your number 1 goal, your top priority, your number 1 priority. The number 1 goal, basically the next thing that you want to work on, right? And the other ones, you keep them there. The sort of, you'll work on them, but later. You pick one, you have the whole list, but you identify, this is the main thing I want to do now. And then how to achieve your goal. Yeah, simple. I mean, you've seen this already in the worksheet, but basically you define your goal very clearly, as much detail as possible. It needs to be time bound. It needs to be, if it's a money amount, it has to be very clear. You need to explain what it is based on, by when, with whom, where, like all of that, you have to put it there. And then you have to find a way to commit to it and set up strong accountability. Sometimes some of these goals, especially when you're pursuing them on your own, it's hard to just, like, how many times have I not written my goals and then put them on somewhere and then forgot about them? Like, it's happened to me so many times. The only time it works is when I share them with someone and it becomes something that we talk about on a regular basis. And it could be a group, it could be a person, it could be whatever. But most people need support in terms of accountability. Not everybody. Some people are extremely self-driven. So that's why important, accountability is something that can help break down the goal to small action, and identify the next smallest action, the very next thing you need to do. If it's about, say, exercising more, that's a very high level goal. No? We're talking about non-financial goals here. Maybe you say, well, I want to exercise 5 times a week, and that's very vague, right? Even 5 times a week is very vague. No, you need to say, first of all, you need to make it much easier, like once a week, every Monday, I'm going to go run for 5 minutes. Now that is a much easier goal to achieve than doing 5 times a day, 5 times a week, something crazy. And the next smallest action would be to put your shoes next to your bed so that when you wake up, you just, your shoes in your shorts, and you just get dressed and go, and put the alarm. Like, these are the smallest thing you have to do. You don't, like, that is the small thing you have to do. And this is what you have to do now. Once you decide what it is, you do that now. The worksheet. Oh, sorry, I see someone. I'm posting it again here for those who join later. So you do the action now, or you time block it, you put it in the calendar, and you make sure you actually make it happen. And if you have to make it happen, you have to make it happen. Otherwise you just don't do it. And that's it. That's how you achieve a goal. So repeat 4 and 5 until completed. And then I have a little table saying, here's the next 3 actions, but really the most important one is, what is the next number 1 action? You do all of the number 1 actions that you can now, and then what is the next one that you have to schedule and time block. So let's do the exit poll, and I'm gonna invite you also to turn on your mics, because now we can talk. But I would love for us to take the poll. How do I do that? I hope I can launch a second poll. Let me see. But please feel free to turn on your mic, and we can have a quick chat. I'm gonna find the poll. There you go. So exit poll. Right. Okay, and I'm gonna stop sharing my screen for now. Oh, maybe it's already stopped. I don't know. Can you guys see my screen? I don't know what's going on. I think it. Okay, stop sharing. There you go. All right, here we go. Here we go. Right. So, yeah, like, how's it going? how was this fast workshop? Now we covered a lot of ground. What I'd love to do is, if you can fill in the poll, we are then going to select one or two of these core areas, and we're gonna talk more about it. As a group of 100 people. So feel free to unmute yourself if you wanna tell me how you found this, if you think it's useful, if you think it's garbage, and because we're gonna make this a conversation as soon as we have all the results in. So far we have 45 responses, and there is 105 of you guys. All right, how's it going? Maybe in the chat. No, actually, no, turn on your mic. Because I feel like I've been alone here for the past hour.
What is the question?
Basically, did you like this presentation? Was this useful? I guess that's the main thing. And then later we will turn into speaking about specific topics more.
Okay. I found it interesting. Yeah, I think for a beginning, it's quite interesting. It covers a lot of topics, and I could find some wisdom in it. So you are not taking, well, I don't have the feeling you are selling something. You are more in the advice, in an advice mode. So thank you for that. And yeah, I think with this we can dig more deep. Because yes, this is covering the general aspects, and I think everyone can find something for its personal life, because we have all different models. We have lonely persons, we have big families, as I am. So I will turn on my camera so you can see me. Oops. So it's really
good to see you, Nicholas.
So yeah, we have all different lives. We have probably people with no employment for the moment. We would probably have some students. We will have high investors, and well, I think it's the first time I participate to the workshop. I already had a look into the beginner's guide. My position is I already have some tracking and control on my income. The advantage I have is that I have fixed income, but I have a large family. So the expenses are higher too. So I already have a profile of having control on my expenses and track my expenses. And I'm feeling good and comfortable when I can save money. And so this is my focus, my daily focus. Every day I track my expenses, and I found an app, Money Lover, on the App Store that is free, and I can just input the expenses and put some categories so I can track it month per month. Now I want to track better and more, and most of all, I'd like to learn how and where to invest. I know ETF. I'm just taking some information, but it's not always easy. I don't know which platform to use, etc. So yeah, I have many things in mind as real estate investment too, etc. I don't have a big budget, but I'm trying to.
Yeah, I mean, awesome. You have most of the basics covered there. Tracking your expenses and knowing what's going on. Not everybody has that, and it gives you already so much confidence now and control over all of this. And so it's great. Like, well done. Very, very cool. Very, very cool. And look, I think we're going to talk about investing today because it seems to be one of the highest voted topics. So so we'll see more of that soon, I think. Anyone else want to share? Sorry, yeah, go ahead.
Yeah, In fact, I already invested a little bit as an exercise in bitcoins and similar matters. It was only for testing, and it was just before it dropped. But I hope,
like most people.
like most people, and but it was an exercise, and so I didn't invest a lot. I invested something I could lose.
Yeah.
And fortunately, I didn't lose it. But
yeah, plus it might come back up. We don't know, right? But it's
yeah,
at least you're doing, like, you're learning and you're testing. And
yeah.
when you get a feeling, then you'll be more comfortable doing more and basically building from there. But you're certainly on the right path. And this investing piece is clearly, like, it's for a lot of people who are interested in this topic, is the missing piece in the whole financial independence engine, because most people come here saying, yeah, I'm already saving okay, I just don't know this whole financial independence investing thing. And so yeah, that is a very, like, it's a common point of discussion. So look, the whole financial independence community is focused on this. And so, like, join the Facebook group, check on Reddit, there's a lot of information, people sharing everything here. And we have, like, the event in 1 month, it's all about this. So yeah, join, and you'll learn a lot, and hopefully that will help you.
And I'm also reading the Tony Robbins Money Master the Game.
Awesome.
I think it would be also a good point. And
yeah,
but I still believe that even saving €1 is better than saving nothing.
yeah, certainly, 100%. Awesome. Anyone else want to share a bit of feedback on how the session went, and maybe different perspective, maybe a similar perspective, or reaction to what Nicola said?
Hi, good evening. I would like to thank you, because I think you offered a lot of value. Well, it's pretty basic, but still it's very valuable. And I especially like how you emphasize mindset, because I think that's one of the most important things before you get into this, is to think like, what do you want? I loved how you said, don't do this because you're running away from something, but do it because you're running towards something else. So yeah, I just wanted to say thank you.
Yeah, I'm glad you found it useful. So do you want to share what's your goal? Maybe do you have something in that direction?
Well, I would like to build enough passive income to become independent, of course. I'm already using several ways to get there. Next thing on my list is setting up a side hustle, which will hopefully eventually turn into the main hustle, so I can skip the paycheck.
Awesome.
And then yeah, I'll go from there. Focus on family. I think that's my main why. I just don't want to be caught up with a job while my attention and energy could be going towards a family and other important things in life. So
yeah, I love that. I mean, for me, it was the same driver, just creating space for family.
Thank you for the inspiration.
Yeah, no, I love it. Thanks for sharing. Thank you, Michelle. Anyone else want to share? I'm going to also end the poll and show you show the results. But please feel free to turn on your microphone, because now we're going to talk about those specific topics. It's 9:20. I suggest we do 2 times 15 minutes on the top 2 topics. Obviously, I asked the question twice, but it seems that index investing is probably the highest rated topic, and earning more is the second highest topic. So we can talk about this, and I can answer almost any questions on index investing, and I think on earning more, we can make it more of a brainstorming session. So I think we could start with earning more, because then you have to turn on your microphones. I don't have to be alone answering questions. So I would love to hear from anyone who has experience, finding ways to earning more, either through their existing job or through side hustle. I know a lot of you have already. So if you don't mind sharing your experience, turn on your cameras, turn on your mics. And yes, who wants to start? I see Deepa and Tail. You guys.
Yeah, I can start some.
I do.
I'll just switch on my video. I don't know if you can see me now.
Yes, I can see you.
Okay, I can't see myself. But it's yeah, so after I started the journey, I think only just 3 months ago. But I do have, I have my own apartments. But since I'm kind of a nomad in Europe, I keep shuffling between countries. So fortunately or luckily, I have another apartment in a different country in Europe, which is kind of paying itself. The mortgage is being paid by itself. And that's about the savings that I have. But there is nothing really, there's no emergency fund, there is no investment as such. And once I found this group, I really realized that I was also spending a lot. So that's my first focus, to cut spending. And I especially spend a lot on my hobbies. I buy a lot of things, but yeah, I'm jumping from one place to another.
Yeah, but these are all important aspects.
Yeah,
so thanks for sharing.
So, and for earning more, I just recently started to, because I have around 15 years of experience in the field, so I started to consult for doing coaching and mentoring for startups in India, which means that I don't have the limitation of the time zone, because they start early. Of course, I need to get up a bit early, but that's still fine. So that's the way I have realized that I can earn more on the topic.
Yeah, that's awesome. I mean, well done finding somewhere you can, add value.
I don't know how long I can do that because of the time difference, but at least it's a start, and it builds up the CV much more than what I have now.
Yeah, very cool. No, I mean, this is exactly, I think this is one of the ways people don't realize they can do that, right? Yeah. So often after 5-10 years of experience, we have so much to teach the younger generation, right? And all they want is to hear how it is practically, like to do certain things. And if you've done it, you can share so much more than someone who's just talking about theory.
And it's also quite satisfying. So it works both ways.
Yeah, I completely agree with you, because I do some coaching for personal finance, and I do some teaching. So super satisfying and impactful. No, it can change people's lives. And so I'm sure you see some of that as well with your work.
Yes. Yeah. And thanks a lot for this group and this sessions. It helps a lot.
I'm glad it does. No, thank you. Thanks for sharing.
Thank you.
Anyone else with experience in like side hustles or earning more in your current job or outside? Real estate investing is one, but I would say that's a specific topic. I think anything else aside real estate would be great to hear from. But yeah, feel free to unmute yourself, turn on your camera. I'd love to hear your thoughts. Or questions. If you want to ask questions, that's okay.
I would like to share.
Hi, Maritin.
Hi. Last year I still had a full-time job, and I didn't have any money saved because a few years ago I traveled a lot, and I started teaching on the side. I did that for a year, and I could save 10,000 euros, but I mean, my health was really bad because I was working too many hours a day. So it was a good thing. I saved a lot, but in the end, I had to stop because it was a bit too much. It was not the ideal way to do it for a long time. So I wonder how you how you did that.
So what would you do differently if you were to do it again? Like, is there?
I don't know. I think I also have an issue with raising my prices or like asking enough money. I mean, my partner is also a consultant, and you have different rates for that. I mean, like teaching a language, it's not that they're going to pay you a lot of money to do that. So it's still a challenge to value yourself as well, I think, or finding the right audience.
Mm-hmm. Yeah, I mean, side hustles it's hard because all of a sudden we have to sell ourselves now. And as you say, pricing is a very different question, and being visible so that people know that we're doing this, so that they can come and ask us for it, is not easy unless there's some platforms are making it super easy. But even then, you have to market yourself, present yourself, and deliver, and then raise your prices is difficult with people who are, say, current students, for example. And yeah, it's very difficult. It's like, my experience is that when you are employed, you are, and even if you're selling somebody else's stuff. When you're selling yourself, it's impossible because it feels bad. It's very difficult, and there's so much at stake, because all of a sudden we are the ones being judged, not the company. And so I think, yeah, there's a massive mindset challenge to side hustles, and when you have to sell, something that certainly should never be underestimated, because it's too many, for many people, it's not natural. We're not trained. We never taught how to sell. As employee, like I was an employee for most of my life. I was one of the best person to sell a project and, solve problems and get clients. When it came to my own services, it took me a long time. Yeah, I really struggled. I still do. This is just, it's extremely hard. So, but yeah, there's a lot of work there. I think side hustle entrepreneurship is an amazing journey, because you're forced to take responsibility for who you are, what you deliver, how much you value, and the whole process of selling is extremely hard. So yeah, I mean, I think even just for that journey, even without the money, I recommend it to anyone. Like I wish I'd started earlier, because we learn so much about ourselves. It's like really always going beyond our comfort zone, and always sort of have to get out there. To some people, it's natural, right? And you see them everywhere. But for most of us, it's so hard. It's really, really hard. But I would say it's so valuable just from the experience. And then the money is good. And if you become good at it, then you can quit your job. Certainly, like, it's possible. But I mean, I think in your case, it's just the pricing and, putting limits in place and thinking about this with your partner as to what is okay, what's not, and protecting yourself, right? Like I started doing this for free for many years. In 2015, I was giving talks all the time, and all of it for free. And I had my full-time job next to it. And yeah, I was crumbling because I committed too much, and then I was empty. I was helping a lot of people who wanted help, and then it was exciting, and then I was drained, right? But so I was bad because I was doing it all for free. It's not a side hustle. That was 100% volunteering, which I do still a lot because I enjoy it. But I also have something else now that allows more resources as well. I don't have to do everything myself. So there's but yeah, it's amazing journey. Anyway, thanks for sharing, Marika. And yeah, I mean, anyone else with experience? Maybe anyone wants to react to Marika and like share advice or experience. It'd be amazing.
It's Belgian culture. Nobody dares to speak up.
It depends. It depends.
I would like to add in. I can understand what you're saying. Apparently, it's called the imposter syndrome, and I suffer from it too. But then again, like I said before, that is why mindset is such an important part of this, and also, yeah, believing in yourself and your own value. I think we not even only concerned to this, but in general, everyone should believe in themselves a little bit more, because when you're in it to help people or your intentions are good, just go for it. And people, it's up to the clients to determine if they want to pay. So you can ask whatever you want. It's up to them to determine, do I want to pay this or not? Do I think this is worth its money or not? So you just pick a number that feels good to you, and then leave it up to the other people. It's not up to you to ask for their money. It's up to them to give it to you. So.
Wow, I love that. That's super powerful.
Thank you.
Yeah.
I do think a little market research can help, though, in setting the price.
Yes, of course. Don't exaggerate.
I have.
Well, if nobody buys, you also know. Yeah, Jonathan.
Yes, no, I have a little example on selling. Because this summer I went to my parents and they told me to get rid of all my old Lego toys from when I was a kid. And the thing is, I love those toys. Okay, so I found some guys, or Facebook Marketplace, and I sorted all my toys, blah blah blah. I put the boxes together, and I say, look, I'm selling, I don't know what, the monorail, the city, the police, the whatever, all this type of Legos, and I loved them as a kid. So it was not heartbreaking to sell them. It's okay, I don't play with those things, but I really loved them. And then I saw the people coming, and I had no trouble at all to sell it. Why? Because I was like, I know you want it. I know it will help you. I know you want to pass it on to your kids. I know you love it. So, okay, the Lego thing, it's one thing, it's emotional, but I know I'm doing the guy as a favor. Because there was this father, he came and said, no, I wanted to pass on to my kids my passion I had as a kid. And okay, you have this castle. And I said to him, when he left, I said, yeah, but I feel you are more happy than the kid. But joke aside, just to say that, look, if you feel you're helping, if you feel it's a good product, honestly, it shouldn't be a no-brainer to be able to sell.
Yes.
It's the only way to be able to sell.
Yeah.
Otherwise, it feels weird.
I mean, I love the product. I know I can help. So at least this example, it has taught me something about selling. Yeah.
Mm-hmm. Yeah, awesome.
I think it gets easier when you focus on value instead of price. So put all your energy into offering value, and then the price will follow.
100%. And what's your experience, Michelle? Do you have side hustles, or are you an entrepreneur, or?
No, not yet.
But you seem to have a lot already figured out.
Yes, I'm trying to convince myself as well in the meanwhile. So
So what's stopping you?
Well, the only thing that's stopping me is me. I'm waiting for inspiration and ideas, but I do feel that they're coming. So I'm taking a bit more time to do nothing, and then the inspiration pops up. So that's a new way of doing things, because before I was always out looking for stuff and trying things and learning. As you can see, a lot of books, never a dull moment. But I noticed that the more time I spend doing nothing, the more everything just comes towards me. So I have full confidence that I will be all right and everything will be all right.
Is this something you kind of want to work on? Like, are you identifying the next small step for this, or not necessarily?
Yes, because I think I would like to work with women, offering them a safe place to speak and to get together, to connect, like women's circles. So yeah, it's becoming more and more real. And I think even this year, something will definitely still happen. So I'm very excited.
All right. Awesome. Well, maybe some people here are interested, and they can get in touch. You can send a private message to Michelle if you want in the chat. Okay. Who knows? I don't know if you're open to getting clients.
Well, there's no plans yet, but if there's women, I'll make up something.
You can build a list already with anyway.
Thank you.
But no, awesome. Just make it happen. And when you do, are you in the Facebook group?
Yes.
And when you do, please share. Like, it's amazing. Just it's so hard. It takes courage. So yeah, please share. Thank you for sharing already now.
Yeah, thank you for the support.
Yeah, no, of course. Tail, you have some experience. You were sharing a little bit of your perspective there.
Well, not on making money as a side hustle, because I've been thinking about something, but as I started to research it, there was a lot of regulation and costs that go together with that. So I decided to put that aside and focus all my efforts into investing, not just index investing, but I'm also a crypto enthusiast. So I was kind of surprised that someone mentioned that Bitcoin dropped, because as far as I know, it's at an all-time high.
went back up since then.
Well, that's my thing for now. The thing I have a little bit of trouble getting under control is an overview of my expenses and my net worth, because it's tied into so many different accounts, things, assets, that it's kind of hard to get a complete overview.
Mm-hmm.
Which is then hard to make a roadmap to see how far I still have to go or how much I need. Or
so, what is this something you want to do?
Well, I have no idea on how you can actually take into account the pension that we will have or are supposed to have at this point from the government, to how to factor in the house, how much is paid off, how much is actually worth, and how to factor that into all of my accounts, like crypto accounts and stock accounts and ETF brokers, and then factor that in to make a trajectory. That sounds like a big task to me that I haven't fully wrapped my head around yet.
You can go gradually. You can start with one thing that's important and just put that in a spreadsheet, and then add an extra column for something else later. But I think the pension is something you can solve through mypension.be. It gives you an idea. It's obviously not perfect, but the housing thing, there's probably ways of appraising the value, but I don't have experience there because I don't own a house. And I think everything else, you can probably just gather the data, put it all in a spreadsheet and sum it up and see what happens. Now it's like, I think start simple, just start simple and then build gradually. If that's important to you, I think that's,
I think I just have to start writing something down and then correct it as I go.
Like you can look at my example. I mean, it's going to be in the recording, but it's just simple, one line per month. And you don't need more than, like, if you do it once, you don't need second line, just do one line and you put all the things that you own and just sum them, or you can put them in the other direction and sum them. Most people do it like that, but that's it. You do it once, have an idea, and then you do it 6 months later, and has it gone up? And that's the question. And if it has, then that's it. You go, you celebrate.
Okay. Thanks for the tip.
Yeah. Cool. Anyone else wants to share something on side hustling? Otherwise, we move to index investing. We do 15 minutes on that, and then we wrap up at 10.
Maybe I can. Yeah. Can you hear us? Okay.
Yes.
So actually, here's the member. I'm just joining.
Yes. I know Benoit. I know. What's your name?
Wishaya. Yeah.
Right.
Maybe not about side hustling, but given the the marketplace situation right now, the employment market, I think 40% of people have changed job or are looking to change job. I think the market is hot. So if you want to ask for pay rise or change job and earn more, I think it's time to do it. I just quit yesterday.
Okay. So good news or bad news? You seem happy.
I'm happy.
Okay, congrats then.
About my decision. There's no looking back. I mean, it's a lot of risk, but I'm grateful to be able to decide without worries. But I think it's time, if you want to change job and earn more, I think the market is hot. There are a lot of job openings right now, and good people are leaving. So I think the purchase power is with the candidates. So as long as you have good experience, portfolio. My background is a bit in HR and in consulting. So I've seen a lot of turnover, and just want to share it. Maybe if you just can't get your increase where you are, look somewhere else.
So you've been recruiting people as like in HR?
That's one of my things. Yes.
So maybe, from an expert, like what are, one or two ways to stand out and be noticed and maybe get hired, like things that maybe or something else, like what's a common mistake people should stop doing?
Maybe just to share my actual experience.
Yes.
So I just resigned yesterday, so my LinkedIn can't be updated yet. I keep it secret. I have a lot of clients and my colleagues don't know it yet, so I decided to put it on my Facebook. And I don't have a lot of friends. I have about 400, but I only accept ex-colleagues or clients. in my Facebook network. So Facebook is completely private. And I just decided to post, just resign. What's next? If you know of a role, contact me. And guess what? Within 24 hours, one of my previous ex-colleagues, who happens to be an ex-president of an EMEA business unit, contacted me, say, hey, my new company is looking for someone. If you're interested, keep me posted. That was, none of my expectations at all. But I think people within your network and people who really know you as a person, professionally and also personally, those are the best reference you can get. And it really, I was on the moon to hear that. I find that a lot more satisfying than getting an endorsement on LinkedIn. So I think you need to find your network, tell them, like, I just took a big step in my life. You know who I am, you know what I'm interested in. Would you be willing to share your network with me? And that seems to work. I have not landed anything yet, but at least, it gave me a boost on my self-esteem and the outlook of, here, I'm gonna find a new challenge.
Awesome.
And of course, the classics, work on your CVs, making really authentic cover letter. So I wanted a job in a company where they work on sustainability, caring for the environment. So I wrote an open heart cover letter saying, like, look, I'm taking a big leave. I'm open to anything. Just give me the opportunity for an interview, and I want to prove to you that your core value speaks to mine. So very sincere, honest letter. Wow.
Awesome. Well, I hope it works out. And it's great that you have already some support. And yeah, thanks for sharing, your experience there, because it's not something people talk about very much either. So that's another big topic of conversation: how to quit, how to find another job. What do we do? What can, and I like that's like an entire other topic. But so thanks for sharing your experience there. Very nice.
One question, maybe, I think you kind of asked it, Sebastien, but what do you think is the most common mistake applicants make when they look for a new job as a recruiter?
Is that for me?
Mm-hmm.
Yes.
Underselling yourself, maybe.
Yeah, I don't know. I think you have to show your authenticity. People can see through you. Sometimes most people would use sexy language like, I'm passionate about technology, blah, blah, blah. But what is really important is, I think, to have your portfolio that shows your past experience and prove it to the recruiter. And I think coming from HR myself, I think a lot of people hate HR because, they block, they create roadblock. It's all about admin, red tape and all that. And a lot of HRs and companies look for people with past experience. So I think you need to find a way to overcome that. It's like, look, like, this one did not have any experience solid experience in project management. He came from market research, but he was able to use his network and convince the interviewer that without that experience, I'm able to bring in different insights, right? If you always look through the same lens, you will never solve the same problem. So I think the authenticity and creativity to prove to the HR and get past them to say, hey, look, I don't have the required experience, but here are the things I can bring in, I can contribute. And I think that could be one really good selling point. Instead of doing the classical, I've achieved, X millions of revenue, I've managed a team, those classic questions. But I think if you could find creative solutions, then that distinguishes you from the rest of the candidate. Hope that helps.
Thank you. Very good tip.
Ellen, regarding authenticity, do you hear me?
Yeah.
Regarding authenticity, what about, and I want to know your HR point of view.
It's not me doing consulting.
Just one quick question. If, for example, during the interview, I say that I had, for example, an experience not in my passionate matter, So for example, me, I'm passionate about data and BI, business intelligence.
Yeah.
And I had an experience of few months as a business analyst, pure business, no data relation. And this was really frustrating because I had no connection with data and no opportunities for connection to data. Highlighting this bad experience, could that give the impression of authenticity?
You can say it, but you have to offer how you're going to prove to them that you can bring something that they're expecting. So maybe you need to do some research to find data set or something, and then find a solution. And based on the data that you could find out there, create almost like do a business case to say, okay, if this were to be the obstacle based on this data that I have, I don't know, using Power BI or whatever, this would be some sort of solution that I would come and propose to you with this and as backup, as cost, as time, as, work on a concrete business case. I think they will appreciate the fact that, true, you did not have experience. However, you've gone through all the trouble of showing me that if you were to receive this job, you would be able to perform at the level that we expect you to do. And you know what you're talking about. You know the time you need to spend, the skill sets that you need to make, the tool you need to use at X amount of time. So you have to talk like a pro, like, without that experience, but if I were to solve this, I would do it. And I think that would speak for itself.
Okay. I got it. Well, actually, I could use my following experience because that was a few years ago. And then I moved to a mission in the BI sector. So I reconnected with my passion, actually. But I understand the point of highlighting something that has a value for the customer. And I understand that.
Okay, so thank you so much for that. I think, I'm sorry to interrupt. I would like to move on to the next piece so that we cover the topic that most people wanted to talk about. Before we do that, what I would love to do is take a picture with everyone. And the way I do that is simply, obviously I take a picture and I will post it in a few places, but I would love if you could turn on your camera, and when we're all ready, we'll just do a bit like this together and smile and say hello. And I will keep that. Your name will not be shown anywhere. It's just, just want to show to people that these are fun meetups and lots of people are coming and they find it interesting. So please, if you're still awake and you're not naked, if you don't mind turning on your camera, that would be awesome. We've never had naked people. Oh, we've never had naked people. One time, one guy was, topless. But so anyway, he turned it on and I was like, no. No, he's not on the picture anywhere. I cut him out, but happened once. Yeah, awesome. Thank you. So what we're going to do is simply smile and wave like this. When I say 3, 2, 1, we just go like that. Hello, he, ha. 3, 2, 1, like this. Continue, because I'm taking a second. There's 2 pages. There's 3 pages. Oh, no, 2 pages. Awesome. Thank you so much. So I'll take this from the recording. The names will not show. It will only be the faces. And I'll take 1 or 2 snapshots and that's it. Awesome. So, there's so much more we could discuss in this piece, in this area. I think what we'll do here, and it's not ideal, right? Because we have 10 minutes. But what I want to do is, I think the best is for me to give as much value as I can quickly now. And for that, if you can just simply send just post your question in the chat. And what I'll do is I'll take the first one I see and I'll answer as quickly as possible and just go to the next one. So anything related to index investing, post it in the chat and I'll answer. So I didn't read any of the questions, like anything that happened before. So if you want to ask a question, ask it now, because I'm not going to go back to the chat. But then I can answer right away. In the meantime, what I can tell you is index investing, obviously there's an event in 1 month where I'm going to go through all of this in a lot of details. But the basis is simple. It's investing in the entire stock market with just one fund that tracks the entire market. This is proven by academic research for the past 75 years that it's better than any kind of active investment over the long term. It simply is unbeatable because active managers have fees. They have all sorts of things that make it so that they can't beat a simple index fund. And that is why it is so important for us to learn about this, because every time we invest through some of these intermediaries, we basically pay them the money that they take from us, and that's just less returns for us. And so that is, the base concept. The way we invest in index funds is really simple. I have a blog post where I talk about this. It's like buying sunglasses on Amazon. You create an account, you go and select the product you want to buy, you check where it is available, you look at the price, and you place an order, and then it gets delivered. It's just like buying sunglasses on Amazon. So it's fairly simple. It's just that you have to sort of understand what are those products, how they work, where you can find them, how it works from a tax perspective, because some platforms will do the taxes for you, some will not. Examples of platforms are Bolero, very common in Belgium. DeGiro, very common in Belgium. It requires just a tiny, small extra piece of work from the tax perspective, but it's super, they can advise you on this. Bink Bank was acquired recently by Saxo Bank, so that's the third option. Key Trade is another solid option. Lynx is another solid option, and now Belfius has launched Rebel, which is another one. And I think there's MeDirect and a couple more, but I think the first five I mentioned there are the ones that are mostly used by people in this community. Now, once you have a broker, you need to fund, and you need to identify which ETF you want to buy. There, typically, you will want to buy one stock index ETF, so one index fund that buys the entire market of stocks or a large portion of it, and then one bond index ETF. The bond is for safety. The bond is for protection in case of market crash. The bond is for additional diversification and a way to benefit from market crashes, because bonds will help you simply by the dip, simply by rebalancing. There's a lot of work to be done around asset allocation, and that helps you as well. To manage basically the level of risk. So these are basic things. Now I'm going to go back to the questions. There's so much questions. So yes, there's a lot of questions. I'm going to get some. Okay, so how to personalize your portfolio? So portfolio, as I said, one index fund for your stocks, one index fund for your bonds. You need to identify which one is the most suitable to your local taxes and also some of your personal criteria. It could be that you want a sustainable ETF instead of the traditional ETF. And then the main personalization is you want to adapt it to your personal risk tolerance, your personal risk capacity. And there's a bit of work to be done there, a bit of introspection. But once you understand that, then you identify what is this asset allocation that is suitable to you, and you can go with that. And then there's a lot of ways of making variations in the portfolio. But that is the main thing. The most important decision is how much risk you're taking and how safe is your investment, because that's the main determinant of success in this investing approach. How long did I invest before investing? It's not an index investing question. I started investing in 2012 via funds sold to me by a financial advisor, same stuff that banks are selling. It was a big mistake. And the next year I started investing through index funds. So it took me about a year and a half, 2 years to figure it out from first starting looking at all this. And I fell into the trap that most people fall into at first, which is buying something that was sold to me.
Index fund, c'est les ETF, c'est ça?
Index fund, ETF. Yes, ETF is exchange traded fund. It's a fund that's available on the stock market, and a large proportion of them are index funds, passively managed, low cost, broadly diversified, but not all of them. You also have ETFs of actively managed funds. So typically ETFs refer to index funds, not always. But the ETF is the way of doing that. So ETF is as a product, future evolution.
Like the iShares product.
So iShares is a fund manager. That is one organization that basically provides access to those funds, and they provide ETFs. So they're the ones who manage them, design them, put them on the stock market so that you can buy them, and then they do all of the management behind them. You pay a tiny little fee for them to handle all of this behind the doors, behind curtains. iShares is one big one. Vanguard is another one. Deutsche Bank has a lot of funds. Lixor, SPDR. So, but Vanguard and iShares are the biggest ones and the ones that most of us are using in the community. So yeah, look them up. Future evolution of ETFs. I think it's here to stay. It's super effective from a tax perspective. very flexible, easily accessible to anyone with very, very, low barrier to entry. It's probably the most flexible and easy way to invest, better than the traditional index funds that in most cases you had to open an account with a specific fund provider, transfer a big amount of money, and then they would make a bunch of transactions for you. ETFs completely cut that and make it much more simpler. Taxes in Belgium, very big question. That's like a 2-hour talk if you want. There are a few taxes in Belgium, but the main benefit is there's no tax on capital gains on stock investments. There's only 3 countries in Europe where that's the case: Belgium, Luxembourg, and Switzerland. Maybe 1 or 2 more, the smaller ones, but Belgium, one of the best places for that. There is a tax on dividend distribution, so avoid distributing dividends that come to your account from index ETFs. There's a tax on bond capital gains, but it's tiny, and most of the time it's worth paying for it. There's a tax on transactions, so every time you buy and sell an ETF, there's a small tax to pay to the government. That is to prevent, high frequency trading, speculation. But this is a small tax which we all have to pay, and there are ways of optimizing for that tax and dividing it by 10 if you select the right product. Am I missing anything here? There's a tax on net wealth, so there's a tax on how much money you own, and so that is a fairly recent new tax that has been passed and will impact very rich people who have more than €1 million on their investment account, which is a tiny tax. And I think Belgium should tax more investors. I'm an investor. I depend on my investment 100%. I believe I should be taxed more on that. So what if Vanguard and BlackRock go bankrupt? Good question. Certainly something to dig into a bit further, but typically they are the most scrutinized organizations where most of the money is, and so they have a lot of fail-safe in place, and they work with a lot of banks that hold those assets in different accounts and all this. So they have the whole system in place. But yeah, look it up if that's something you're worried about. Certainly, it's important. Index funds in Belgium.
So what Lehman Brothers?
Yeah, Lehman Brothers is one bank. If you had funds that was on their balance sheet and they crash, then your money is gone. But when you invest with Vanguard, you don't buy Vanguard. You buy all the companies that are in the fund that they manage. Okay. You own the companies, you don't own Vanguard, right? Now, there's ways of managing this, and there's this whole accounting system. But basically, you own the stocks. You own a share that represents the stocks, and Vanguard is managing that. So yeah, there is a tiny risk in case of fraud and massive crashes and all that are happening at the same time. But there's multiple layers of protection in place, which I can't describe here because I'm not an expert, but look it up. Yeah. It's not the same as investing in one bank and that bank goes bust. It's not the same because they don't hold all your money. The money goes to the investments. But look it up. ETFs are different from index funds. It's different from individual stocks, and so that is all different. There's always intermediaries that add a little bit of risk, indeed. Index fund in Belgium that's similar to VTSAX. Yeah, that's the one that is described by Jel Collins in his book. And in VTSAX is the total stock market of the US. For Americans, that is a decent thing to do. As Belgians, we like to invest in the entire world, not just Belgium or not just the US, but a globally diversified ETF. And Jirko responded here, VWCE, that is one option. And there's a few more that can do that. This is the most common one, VWCE. There you go. How do you get over the fear of buying at the wrong time? Very good question. Index investing is a philosophy where we invest for the very long term. So we put the money in there, it's for 10, 20 years. In that kind of framework, it doesn't matter when you buy, because if you buy before or after the crash, in 20, 30, 40 years, it doesn't matter. It doesn't change anything. What matters is that you are in the market and that you stay in the market. Anything that happened in the 1980s or even 2001, 2003, if you invest at the top or at the bottom, makes a small difference today. Why? Because the market has gone up so much that it has multiplied anyway. It doesn't matter where you bought. But that is, trying to time the market is the most dangerous thing to do, because if you sell at the wrong time and buy at the wrong time, then you could lose a lot. So index investing basically is an approach where we say we cannot predict the market. We don't know if I buy today if it's going to go up or down. We simply buy today and leave it there for a long time. Over a long period of time, it will go up, as it has done for the past 200 years. That is the foundation belief, obviously, of investors. Yes, you can invest in S&P 500. I'm not familiar with SXR8. S&P 500, there are ETFs that cover that available in Belgium. Yes. Yeah, Tone responded that securities are held on custodian accounts. VUAA from Vanguard. I don't recall exactly that ticker, but I've seen it before. I wonder if isn't that a bond ETF, but this is certainly one of the options that a lot of people consider. So yes, Sorin. Sten, I think I responded. Thomas, as they do not want us to know about ETFs, is there a risk that they will stop providing access to ETF? Yeah, banks don't provide access to ETF. It's very simple. You go to BNP Paribas, you say, I want to buy an index ETF. No, sorry, but they will send you to the broker that they work with potentially, right? But banks, they have their own funds where they make a lot of money, and they would try to convince you that they have better funds than those, low-cost index ETFs. But brokers are specialized in this, so they provide everything, and they will try to make you trade. But as an index investor, all you want is buy and then hold, never sell until you retire. And even when you retire, you sell only a small piece, enough to pay for your expenses. Most of the money stays there very, very, very long time. Bond or cash, which is better for correction? They're both okay. A lot of people are criticizing bonds at the moment. I think if you're a long-term investor, bonds are essential and super effective even right now with the current outlook. What are options for organizations? Most brokers don't accept account for organization because of Brexit. I don't know about that. Sorry, can't really help in here. Bitcoin ETF? I don't know. I don't go there. I can't predict the future, so I can't predict Bitcoin. I thought Vanguard would only be used in the US. I guess not. Vanguard, as a fund provider, where you want to open an account with them, you can do that in the US, in the UK, in Australia, and a few other countries. But they also provide ETFs that are available from any broker, right? So ETFs, again, are the way to access Vanguard. When traditionally, yeah, if you want to get an account with them, you have to be in one of those countries. Right. Well, do you guys want me to continue? I think, it's 10:03. What I will do is I want to share with you at the end of your worksheet, there's a survey. I would love if you could fill that in. This is basically giving me feedback on what went well, what you would like to see more of. But also if you give me, a testimonial, if you tell me what you liked about this and why you think I should do it again and why you think other people could benefit. I would love to hear that from you, because then I can put that in different places and share this with other people. So the survey is in the worksheet. Please give me feedback. That's all I'm asking in return for this 2 hour workshop, but 2.5 days of preparation. That's what I'm asking. I will send this by email. But if that's okay, I can continue. If you want to turn on your mics, you can turn on your mics. I don't know how many we are left. 68. All right, we can continue then.
I'd be glad if you could go through the questions.
Yes, I continue.
Yes, it's very interesting, and I feel that it's really helping me get to the practice.
Perfect. Take notes. It's recorded, so you'll get access at some point when I send it back. There's a bit of work afterwards, but I will send it over. Simone. So private message here. So I'm not going to say who sent it, but basically, how do we deal with inflation and limitless money printing by central banks? I'm investing in companies. It doesn't matter what currency they're using. It doesn't matter what these companies are doing is providing value. They're using currency, dollars, euros, yen. They might be even using Bitcoin. It doesn't matter. Those companies are providing value. And as they provide value, they grow in valuation. It's completely disconnected from currency. Now, currency plays a big role in the economy in general, but those companies, as long as they provide value, if there's inflation, they just charge more money because it's worth what it's worth, irrespective of the currency being used and its actual current value. So to me, investing in stocks, owning company shares, is a massive protection against all of that money printing, inflation, and all this. Now, there can be times where inflation is higher than whatever you get from the market, but it's fairly rare. Long term hasn't happened. Now, yes, currently money printing is much more than usually, but that's not the only thing that drives inflation. Inflation is, you know, there are a lot of things influence inflation. So I wouldn't be too worried about that. But certainly investing in stocks is a very good way of doing that. There are also bonds that are inflation protected. So you can invest in specific bond ETFs that will also give you an edge on inflation, and you can protect your cash like that. That is often more effective than a savings account. You suggest only one stock and one bond fund in total. Yes, so one stock ETF, one bond ETF. In some cases you can have 2 or 3, but it's certainly not necessary. It can help if you want to, for example, for sustainable ETFs with our shares. If you want to have a global diversification, you want to add an emerging markets ETF. In that specific case, you can have a second one. But in most cases, one of each is plenty, and it gives you massive diversification. And with just that, you're doing better than 99.5% of people. The more complex the portfolio, the more you can make mistakes, the more you will be tempted to compare ETFs that you shouldn't be comparing because you're there for the long term. The more you're protected against, your own psychological biases when you're investing. So yes, to me, the simpler your portfolio, the better. If you could have one ETF that does everything and it would be taxed in the right way, I would probably go for that. But it's a bit more complex at the moment. The day there's a solution like that, I'll be suggesting that. Vanguard, BlackRock, and State Street own the world. Yes, it would be very interesting if they would fail. I don't think stocks would be our biggest problem if that happens. They own the world through the investors. So yeah, I'm not really sure how the whole, this is a very complex system, right? Very, very complex system that has a lot at stake and has all the big players involved and all of the regulators involved. And to be honest, I'm not a complete expert there. On Vanguard in Europe, okay, found this. Yes, so Jill Collins has a great. Yeah, be careful that blog post though. It's got some good, but there are some. It was written by a separate blogger, and I think there's some inaccuracies, but generally it's good. Why are people asking about bonds? Aren't they actually in negative right now? What's the problem if they are negative right now? As long as they go up in the future, and we don't know what they're going to do in the future. People have some predictions for the next couple of years, but they've been wrong for the past couple of years. So most people don't know. And in 10, 20, 30 years, they might have grown much more than whatever the expectation is short term. So what happened recently in the past, completely irrelevant. Actually, it's good if it went down. It's cheaper to buy. Now, yes, you shouldn't. Right now, currently, people say we shouldn't have high expectations for the next 5 to 10 years. So don't expect 20% annual return on any of this stuff. What that means is simply this is still the most effective way of investing. Just you have to save. You have to focus on what you can control, which is saving, and have low expectations is a good way to be positively surprised when things go well. And that's my approach. And it surprised me. Yeah, I didn't plan on reaching financial independence at 33 at first. It was much further, but things went better. So best, cheapest way to get margin, interactive brokers. I don't like margin. To me, it's not necessary. In some specific cases, it might be useful. To me, yeah, I'm not interested. Stephen is answering a question, so I will skip. Andrew, goodbye. An English podcast worth listening to? 1 million. Yeah, I think Bogleheads on Investing is great. Animal Spirits is great. Actually, if you type Index Investing Podcast in English, you'll get a massive list. I would certainly recommend Bogleheads on Investing is a basic thing. And if you're looking for something around side hustle, then the Rebel Entrepreneur Podcast, hosted by a good friend of mine, Alan Donegan, amazing podcast. I listen to it all the time. Although the advice doesn't apply to me, just it gives me the right energy for, entrepreneurship side hustle. Rebel Entrepreneur Podcast. And we hopefully will have him as a guest for side hustle, making money. Right, just moving, not accepting, Valera doesn't accept organizations, quite possible. How long do you spend daily to study the companies? 0. But me, never. Sorin, are you here?
Yes.
Yes.
You said that you are buying stocks. So if you are buying stocks, I suppose that you have to study the companies. Otherwise,
right. Look, this is
complicated.
Yes, amazing question, and I say yes for the question, but I say no as the answer. So stock picking is when you try to find the right companies to invest in, and then analyzing the market is when you're trying to figure out when to buy and then when to sell. Index investing, you don't do that. What you do with index investing, you say, I'm gonna buy everything in one go, and I'm gonna leave it there for as long as possible. And those two strategies have been compared, right? And if you go through professional investors who have, they have costs and have fees, and it takes a lot of energy, they are unable to do better than a simple index fund over, the longer that over 1 year, I think only 1/3 of them do better than their benchmark. Over 5 years is not even 20%. Over 10 years, 20 years, from 20 years onward, only 5% of professional investors, fund managers, do better than the index fund. Now, there are people who trade and do well. Yeah. And it could be skill, but that is, or it could be luck. And the longer the time period, the worse the performance compared to the index fund. So index fund is simply a way of, it's kind of almost too good to be true. It's, you have almost no work to do. You simply buy and hold, and you do better than most of the professionals who have studied for decades and have the whole industry running on their actively managed funds. You do better than hedge funds. Look up for example, look up the bet between Warren Buffett and the hedge funds. And Warren Buffett said, I don't know, it was already 15 years ago, I will give $1 million I will give $1 million if a hedge fund can outperform the S&P 500 for 10 years. And nobody took the bet because they knew they would fail. And one did, and they failed. One did took the bet and failed. And then Warren Buffett got $1 million to a charity from that hedge fund company. It's extremely hard, and most fail. And the longer the time period, the more they fail. So index investing is basically no market analysis. There's almost no work required. You just have to do the work up front to understand how it works. So get the basic understanding. What is a stock? What is an ETF? What's a broker? What's a stock exchange? How does it work? How do taxes work for me? How do I make a transaction? What do I need for my own portfolio? What's my level of risk that I can handle, right? How much stock do I need? How much bond do I need? My portfolio asset allocation. How do I write my personal investment plan? Having a document where it's all clear. How do I make sure that I stay the course, that I don't panic when the market crash? I have a system there. And then just make the transaction. It takes a few weeks to learn if you do it with some support. So like in this case, I have developed a program that helps a lot of people doing that. Or you learn in a few months, or maybe on your own super fast with all the resources free online. If you type index investing or Bogleheads, a lot of great resources. If you live in Belgium, there is good resources for Belgium on the Bogleheads. You type Bogleheads Belgium, or you look on B5.
I'm living in Romania, not in Belgium, but
then
not a problem.
In Romania, you can do the same research.
Yes,
you will find.
Okay, so you are investing just in index funds, as I understand.
Index funds, yes. Okay. Index funds, index ETFs.
Can you describe us your portfolio, please?
Yes, I have one ETF for the global stock index and one ETF for global bond index.
Okay, it is UCITS index fund.
So UCITS, yes.
UCITS, okay. And that means it is FTSE All World Index Fund.
That is one of them. I'm like my own portfolio. I'm not sharing it because there's too many people who want to do the same thing.
You don't diversify your ETFs, for instance, for emerging markets, for small caps, for. Do you diversify, or you have just one ETF?
It's included.
Why you don't, for instance, why you don't invest in NASDAQ?
I don't need to.
S&P 500.
My ETF covers most of the companies that are listed on NASDAQ.
Yes, but it's an average gain. It's not.
Yeah, it's included.
I'm not so sure.
Most companies on the Nasdaq are in the FTSE.
Yes, but with the different percentages. Yes, I understand your idea. But during the growth periods, Nasdaq is much better than your all
sometimes
ETFs. Yeah. So
you can say this from anything, but on average, a globally diversified ETF will do well. You could also just go for the only Nasdaq. You'll be diversified. Well, you have obviously a tilt towards tech and all this.
For instance, I have a different, a more diversified portfolio. For instance, I have, let's say, 50% Standard & Poor's 500, 10% emerging markets, 10% small cap, 5% MSCI World, 5% Nasdaq, and 20% TIPS for inflation and average government bonds, something like that. So
you can do that. You can do that. You have some overlap.
You prefer to have only one ETF?
Yes.
And what is the charge of this ETF?
0.20%, 0.02? No, 0.2.
0.2. Okay, so I'm trying to imagine which one is this, but it doesn't matter.
Yeah, it's one of the global index ETFs. There's a few, but it can be just US, or it can be developed market plus emerging market. It can be, it can be slice and dice like yours. I think the more ETFs you have, it's more complex. It doesn't provide additional value. It's more work. You have to think about rebalancing in a different way. It also is more. It's more tempting to compare the different ETFs you have and say, this one has been not doing well. Say, for example, small cap is not doing well for 5-10 years. You're going to be tempted to sell it. But the whole purpose of the strategy is to hold, because when it's cheap, you buy more of it. When it goes up, that's when you benefit. So just having more ETFs simply means more risk for you to mess it up. What I do for myself is the simplest approach that works for the most people, right? I think you go a bit further. You take additional complexity and risks. Maybe you get more performance, but maybe not. There's no saying about this.
Yeah, I understand.
We don't know, right? You could check the past 5 years, or but you don't know if that's going to change anything in the future.
And I understand that you invested for 5 or 6 years in this.
Since 2013, so that's 8 years.
8 years to reach financial independence in 8 years?
Yeah, less than 7 years, because I have no money in 2011 between my 2 jobs, and I stopped working 3 years ago. So that's 7 years, and
so
it's because
7 years in old world ETF could be enough. Do you think?
Yeah.
For financial independence.
Yeah, it went, but because it went well.
Yes. It went well the last decade, but
yes,
who knows for the next decade?
Exactly.
The next decade maybe will not be the same.
Exactly.
The same profit.
Yes.
Do you remember other decades, for instance, between 20 and 29, or the 70s, when there were the lost decades? So who knows? Who will be the?
Yes, yes.
It could be difficult to reach financial independence in 7 years, or maybe even
it is.
10 years. Even though we respect all the conditions, all the rules you explained, which are very, very well described.
Yes.
And for which I agree. But one criteria is this time in the market. So you should be in the market, and you should be, if possible, to be a little bit lucky with the period. The second is the percentage for the gains, for the savings, because it's very important. And also the amount, the percentage, and the duration. These are the 3 criteria that you need. Okay, let's hope that the next decade will be as successful as it was the last decade, because the last decade was really successful. Why? Because the previous decade, 2029, was practically zero.
Doesn't mean it's gonna be. It could have been 2 decades in a row. That's bad. We don't know.
Yeah, we don't know. Yeah.
No,
nobody
but
knows.
you nailed it. It's how much you can earn, how much of that you can save, and how long you can be in the market. Now, focus on what you can control. You can control how much you save in most cases. How much you earn, you have an influence, but it's up to a certain point. And yes, you can, work your mindset so that you get much further. But so it's still in your control in a certain way. But time in the market, you can control. The performance of the market, you cannot control. Yes, I have been lucky. people started, in 2008 at the bottom, they were luckier, right? And this because they knew about this before. I had money just lying on bank account for a while, but we cannot control that. So we don't, I'm not teaching how to reach financial independence in 7 years. I would never do that. I would never dare doing that. I can't predict the future. All I can say is here are all the tools that will help you make this a better journey, accelerate it if you want to. That's it. And I think you've nailed it. So yeah, amazing summary. Thank you so much.
You're welcome. Do you also invest in real estate?
No.
Other kind of investments?
No.
Only stocks, only ETFs,
Mhm.
index funds,
Mhm.
like that? Okay, understand. Do you have also bonds or
Mhm.
ETF on bonds?
Yes, a lot.
And do you keep them forever, or you plan to use them for corrections for ETFs?
I rebalance. So I will keep the same percentage no matter what happens.
No matter what happens, even with the drop of ETFs for stocks for 20%,
Yeah.
you don't plan to sell the bonds?
Yes, I will keep the same percentage. So if the stock market falls and my bonds kept, then I will sell bonds and I will buy stock. Yes.
Okay.
And the other way around, same. If the stock market rises and my bonds remain constant, I will sell stocks and buy bonds.
Okay, very well. And how frequent do you rebalance?
It's personal decision.
Okay.
To me, I do this every 6 months. But if you're investing, you can do it every time you invest. If you're investing monthly, you do monthly. If you invest every 3 months, you can do every 3 months. If you rebalance once a year, perfectly okay.
Okay. Thank you very much.
You're welcome. I feel like I was interviewed by the newspaper. No, but
well,
sorry,
Sebastien, what you must know about Romanians, that they're very to the point.
Yeah, but it's amazing.
And practical.
Just to specify this, we have also some groups like that in Romania. We have also Facebook groups. We have also webinars, and I'm doing some reviews for books for my Romanian friends and colleagues that I publish in Romanian, okay, in that site.
Awesome.
So I have read J.L. Collins, and I have published a review of the book, the Richest Man in Babylon, the Tony Robbins book. Now I'm trying to publish some ideas about the psychology of money.
Sorry, maybe you share the link to the group or your page in the chat, and then we see if there's more questions. I also want to go to sleep, that's why. But please share so that if anyone here is interested, they can go get it. No problem.
Okay.
Awesome, thank you. I don't know if there's more questions. I guess I could skim through them fast, yeah? Fees. So Simona, you were asking about fees. As low as possible.
I think you mentioned the 0.2%.
That's a typical ETF price.
Okay.
It's a total expense ratio that you should be looking for. Total expense ratio, TER, or management cost. And it's always there on the fact sheet. 0.2, 0.25, all good. 0.10, some bond ETF have 0.10. All of these are excellent. Anything under 0.3, amazing.
Okay. And just to say, I'm really impressed that you rebalance every 6 months. I mean, months, that's really passive.
It's the only time I look at my portfolio. I never look otherwise. I don't even know what it's worth now. I don't know what's going on.
Okay, and you don't monitor the cutoff every month?
Nothing.
Oh, wow. Okay, that's really passive.
Yeah, I do nothing. It takes, like I say, 5 minutes a month is when you're investing, because you make a transfer to the account and then you do the thing. When you're retired, it's 10 minutes per year. That's my work for my money. I work on other stuff, but no, yeah, it can be extremely passive. You don't even need to do it every 6 months. You can do it every year. Basically, it's when I go to get money out, that's when I check and I say, okay, do I need to rebalance? Yes, no, boom. That's it. Sometimes it's just no, I don't need to rebalance. Last time we didn't need to rebalance because we sold stocks and it was okay. So we kept it there. I'm saying we because it's me and my wife now. She's doing as much as me.
Okay, so okay, thank you very much.
Yeah.
And good luck forward.
Yeah, I'm okay. Thank you. Good luck to everyone. But
Just the last question, you and your wife, do you share your account or do you have 2 private accounts?
we both have our investment accounts, but we have combined finances.
Which means
everything belongs to everyone, to both of us, but we both have our investment accounts, and we're both involved in every decision, conversation on all of this, by design, to make sure we're both involved and we have those important decisions, conversations together. What's important is both are aligned and agree on the principles. And to us, her having her own account is just a testament of how much responsibility she's taking in all this with me, right?
So you set it up so you have one account in your name and she has one account in her name, and you just put 50-50 on a regular basis.
Yeah, as long as together it works with our target asset allocation, we're okay. Sometimes one of us is a bit off, but the other one is a bit off the other way, and that's fine.
Because you cannot create an account, the two of you, right?
I think so, yeah. Well, I don't know, to be honest. I haven't looked it up.
In Bolero, you cannot.
Right. So no, Bolero probably not.
I don't think so.
Then it's personal, but I mean, if you have combined finances, it belongs to both. I'm in favor of everyone involved and everyone having their own account. I think it's healthy. It's good conversations. It's tricky sometimes because it can be technical. We can disagree on certain things. For example, how much risk do we take, right? But it forces a conversation and it forces an agreement because we're doing it together. Conversation on values in most cases, which is very good. Aga was asking a question on investing through a company. I'm not an expert. I don't have a company yet, but my understanding is that it's not as efficient as if you take the money out and invest privately, because as part of a company, you will be taxed on capital gains as if it was profit. So you get taxed basically. It's from the top of my head, right? But basically from a tax perspective, not as interesting. So it's more interesting to take the money out and then basically pay taxes on all that and then let it grow tax-free. That seems to be more better from, at least in most cases. There might be specific cases. And then you're limited as to how much you can invest through your company, because otherwise it becomes an investment company, which is again taxed differently. So anyway, so that's kind of a high level review.
I have a question, Sebastien.
Yes.
So I have a bit of money saved, and there is a garage where I live. It looks interesting to buy.
Yeah.
If you were me, would you buy this garage as your investment, or would you invest the money somewhere else?
I don't do real estate. I cannot answer. It's very much a personal decision as to what is your preference. If you've done your research on the garage, if you've compared it to other options such as the stock market.
Yeah, I'm new in this kind of stuff.
I think it's worth spending time figuring out how everything works, because you need to compare them to each other. So a good investment in real estate is only good if you've compared its potential returns to an equivalent investment in the stock market. The stock market does an average long-term 6 to 9%. You want that investment, everything included, hustle, costs, fees later, whatever, repairs, vacancy, all of this included, it needs to return 6 to 9% to be worth it. If you're willing to put the time. Every time I look at real estate, which I have in the past, I never get there. And every time despite all the work to buy this thing, I still don't get my, 6 to 9%, like sort of on a conservative perspective. But that's just me. So take a look at the different options and compare them from how much time it takes, how much it aligns with your lifestyle. Like, are you willing to move, or so different aspects. And I landed on index investing, and I think it's an excellent solution for a lot of people. But if you're very much into real estate and you want something tangible that you have control over, that you can take care of whenever you're around, and then real estate is probably more for you.
Okay, thank you.
Yeah, no worries. Maria is asking which ETF I chose. These were questions from 23 minutes ago. I'm sorry. I don't say exactly which ETF. So I think I described my portfolio in a good way. And I basically use the ETFs that most of the community are using. So if you're on the Financial Independence Belgium Facebook group or BFI or Reddit, you will see my ETFs are there. Same. And I use ESG ETF. So maybe a slight difference to what is mostly discussed is that my portfolio is sustainable. There's a filter for ESG rated companies, which removes all of potential harmful companies, tobacco, nuclear weapons, and a bunch of other useless stuff. I don't want my money there. Makes very little difference from a performance perspective. Recommendation for a bond ETF. I don't have them from the top of my mind. There's a few that are discussed in both the Facebook group and Reddit and on the Boggerheads Belgium page, and they're excellent. There's a few new ones. I don't think they've been discussed very much yet, but these ones, like whatever is already there, is pretty solid. If you're not close to FI, is the bonds ETF still useful? This is all like this question from Jim from 23 minutes ago. A bond ETF depends on your personal capacity to risk, and you want to take less risk than you can actually handle. And that requires a bit of introspection, a bit of work on your side to figure out what that is. I've never been 100% stocks, because I did, like, when you're young, you don't know what your capacity to risk. You potentially have more capacity to risk, but you don't know. And as you grow older, you have more to lose if something goes wrong. So you tend to take a bit more protection. But that, that's a very personal thing to say and to decide. There's people who are retired in 100% stocks. There's people who are just getting started in the 50-50 bond stocks. And there's no wrong answer. And they're both going to perform very well. 50-50 is excellent. Rebalancing has a lot of power. And it's safe. You sleep well. Buying a bond ETF versus buying the Treasury bond directly. Guillaume, I don't know about this. ETFs are just so easy to access and so flexible. Yeah. Stephen gave a nice inflation-linked Gov bond ETF. This is a good recommendation typically. Buy gold with interest. You can add gold to your portfolio. You don't have to. Most people are sort of against gold. But I don't have a specific opinion. I think it can add value to a portfolio, but it's certainly not necessary. Jay Collins proposes one ETF only, not two. Yes, because he says go 100% stocks. I think this is a very personal decision. I think that is risky for most people. Most people cannot handle a stock market crash. And I think that's something he sort of overlooks maybe a little bit. He's sharing his perspective from his personal experience. And I think people who have worked with individual investors certainly don't recommend 100% because most investors can't handle 100%. You can handle 100% when it's going up. But when it's going down, most people can't. And, I consider myself very on top of this whole philosophy and strategy, and I still don't go 100%. I don't need to take the risk. Why do hedge funds exist then? They have access to different kinds of investments that require different kind of money, private equity, and they are good at selling. So they're good at selling and they're good at making money and they bring the biggest brains. And a lot of people are not happy doing the average, despite the average being much better than anything else. And they think they can be smarter. And so that's how the whole business works. There's a lot of psychology behind all this. Hedge funds. Oh, there you go. Stephen gave you another explanation. All right. Bedtime. Yes. What about TER Vanguard on Belgium? So the TER, the total expense ratio, is the same no matter the broker you use. Brokers will differ in terms of their fees, access to stock exchanges, accessibility, safety, security in some cases, also how user-friendly they are. But the TER, the total expense ratio, which is the biggest cost in our investing, aside from taxes sometimes, that is specific to the ETF itself, not to the broker. Me and my wife started the FIRE journey together. I started before her. And when I met her, I had started investing and I had plans to retire. Just working with her made this much easier, much faster. My wife was a good saver and she loves freedom and family like me. So it really it connected super well. All right. I think that's most of it. I keep scrolling, but feel free to turn on your mic if you have more questions. I'll do another 10 minutes.
I have a question. First, thank you very much for sharing all your knowledge. It's very valuable. Now that you are financially independent, I guess you are withdrawing the money from your investment. Yeah. Do you have like an exit strategy, or how do you do that part?
I sell money, I sell a small piece of my ETFs every 6 months.
Okay. And do you reinvest as well from your profits, or?
It's all my funds are accumulating. There's no distribution.
Oh, okay. Okay.
So everything is reinvested automatically. It's most effective tax wise, and there's no work for me. Okay, so it's perfect.
Okay, and then you withdraw like every month, or it's for a big period of time to avoid taxes when you sell?
No, the taxes are mostly based on the amount I'm taking out, because it's a transaction tax, it's the main tax. So it doesn't matter, almost doesn't matter how often I do it. There's a transaction fee from the broker, but it's fairly small too. No, I do it because we don't need to check our portfolio. 6 months seems like a reasonable time to go and rebalance, take money out, and basically replenish so that we have enough money for a year. And so every 6 months we add extra 6 months to it, and we always have between 6 and 12 months of money in our account, and that's it.
Okay, thank you.
Yeah, super simple. Super simple. It's almost like cheating. There's no work involved at all.
Sebastien, you said something very interesting. How do you reinvest automatically? Are the brokers providing this option, or?
No, this is the type of fund that you select. So ETFs are typically exist in two versions. There's a distributing version and an accumulating version. The distributing will actually send the dividend into your account. The accumulating will simply take those same dividends and reinvest them in there. And so it's going to grow the actual value of the fund directly. In Belgium, it's certainly more tax effective because you don't pay tax on dividends when it's accumulating. And they try to counteract this with a bigger tax on the transaction. You can still optimize for it. And so it grows tax-free for a long time before you have to pay anything. So yeah, it's simply two types of ETFs, and one is accumulating, one is distributing. Most funds have those two available for Belgian investors.
Thank you.
Feel free to ask questions, otherwise I go back to the chat. How ETFs inherited? They just follow the normal inheritance rules. So,
well, like a real estate, for example, then those people who take your real estate, they will have to pay a very huge tax. So how does it work with stock? It's actually kind of additional to the question of Marielle when she was asking about your wife different accounts. I mean, I know it's still long time, but you know, those are things that, you have to still think about, I guess.
We haven't looked into it. I know it is just managed like any mobile investment. So it's like stock market investment. It follows the same rules. There are ways of optimizing this in advance if you make gifts and you do them, long enough before you actually pass away and all this. But generally, I haven't looked into that very much. I'm not so concerned about inheritance. I don't really intend on giving very much to my kids directly. I don't like, at least not when they're very young, and a lot of it will go to charity in most cases. So I would like to optimize for charity donations instead of going for it to go to taxes. So I'll probably be giving away, before I die, sort of in a planned manner. Yeah.
All right. Thank you.
A 5-minute video. Jim, I don't know. There's a few on my YouTube channel. Otherwise, I just don't know. To accept to my wife and friends. Yeah, it's tricky. 5 minutes video is exactly what you need, indeed. You don't want something that's too clickbait type thing, like, oh, this guy retired at 30 whatever and now traveling the world with his 5 kids and 7 dogs and on a boat or something. That's crazy, and it's kind of like, yeah, that's not me. My story doesn't work either because it's just too extreme. but the simple principles of financial independence are extremely powerful. I think the best way to, like recently I've seen videos from Playing with Fire, which is a documentary on financial independence in the US, and they have a YouTube channel. And on that YouTube channel, there's a few really nice short interview clips from people in the US that are explaining some of the key benefits. There was an amazing one by Brad Barrett, the co-host of Choose FI podcasts, where he was simply saying, financial independence is just making a few small optimization to get more of what you value in your life. For example, time with my kids. And he just shares that.
Maybe
Amazing.
maybe closer to us. And this video is actually what brought me to the FIRE movement. There is so a few months ago an Arte documentary, which is Dutch and French, and so and it not only covers the FIRE movement, but it covers the general movement of these people that try not to work, try to increase revenue or spend less to diminish the dependency on work.
And this is in Germany, right?
Yeah, I think it was German, this one.
Yeah. This is a good one, but yeah, it's decent because it shows certain things and it shows also some of the challenges.
Yep, and I think that in that documentary there was also families around the world, and so it gives a general idea, and with that maybe people can dig by themselves. It's actually what I did. I saw the documentary, and then I said, FIRE? What is that FIRE?
Yeah.
And I searched for FIRE, and I found FIRE Belgium.
Awesome. Yeah. So this one, but it's a long one now. It's an hour and a half, 2 hours.
Yeah.
But it's worth checking out. So Arte Financial Independence, but I think it's in German. I don't know what there's also the version in French. So French, Dutch, and German, I think, and maybe English as well. Yeah, subtitles, right? That's a good one because it's Europe. It's examples. You know, the guys that were interviewed there, they're actually not happy with the outcome.
So I will send the link of the.
There will be a few articles in the newspaper soon about financial independence in the Morgen and Nieuwsblad. So if you that's one way of convincing people is like, look, it's in the newspaper. It's not just me, it's also there, right? And so there's a bit of my story and a few other people that will be shared there. There was an article in Atlas News, but it was behind paywall. I don't know how the Morgen and Nieuwsblad will do that, but it should be. I think at least one of them will be printed. I'm not gonna read all the messages, but thank you for joining. I think that's all for today. If you want to say a last thing, if you can turn on your mic and say something. But I look forward to seeing you on in a month. There's a dog that wants to say goodbye. I don't know. I just heard the noise. I don't know what it is. No, but so I look forward to seeing you in a month. I'll talk about index investing, the whole framework, why it's so powerful. If you're not sure index investing is for you, that would be a good event. If you just want to know how to get started, that would be a great event. I will also present the program I've developed. So if you want to get support and coaching and like a structured framework, a bit like what we did today, but over a much longer period of time. It's a program that takes 6 weeks to do everything from start to finish. It just takes care of it for you. And it's all super customized to your own personal needs. So I will be also presenting that at the end for those who want support. But otherwise, everything is there for free if you want to do it on your own. It just takes a bit longer, maybe a few more mistakes, but it's all there. So most of us have learned like that. I'm just helping those who need a bit more help. And then I'm thinking, and I'm saying this to you guys because it's a small group and you are like hardcore financial independence people. So I'm thinking of doing an in-person meetup in the next 3 weeks. We'll see, but somewhere in Brussels probably, because it's kind of the center. Either Brussels or Mechelen is kind of, most people are still on the Dutch speaking part of the country.
Brussels, yes.
Brussels would be best because I think that, there's a few nice parks. You can grab a coffee or something and just walk around and just chill. And then I might organize a follow-up event on this workshop for those who want to, sort of talk about what they've done based on this workshop and move forward. So, but that depends on, if I manage to get enough sleep and if I have the courage to actually do it. So I can't promise it down, but a lot of people seemed interested in the poll, so I have to consider it, and then I will see if I can actually do it. Because obviously, yeah, I can't take care of my kids when this happens. So, but otherwise, that's all for today. I'll stay here for 5 minutes if anyone has final comments, suggestions, or anything. I would love your feedback on the feedback survey that is at the end of the document. I think I have it in my slides as well, but I didn't even get there. I'll post it here just in case you're looking for it. Yeah, here. Right. Really, just in case you have yeah, I would love that, 5 minutes. And the biggest piece for me is, positive testimonial that you would let me share about the talk so that people know that it was good. Right, that's all. Thank you very much.